Very good afternoon to the viewers of today's VCM on option trading simplified, being hosted by Dehradun branch of CIC of ICAI and organized by Committee for Capital Market and Investors Protection of Institute of Chartered. We have the presence of CA Anuj Goyalji, the chairman of Committee for Capital Market and Investors Protection, the fifth term Central Council member, and as well as he is the chairman of Research Committee of the Institute of Chartered Accountants of India. We have with us our learned speaker, Rudramurthy sir, is a well-known face in the capital market. And we have the hosting branch vice chairman Rajesh Gupta ji and other office bearer Harshit Gupta ji, Chaudhary ji, Vimal Kishore ji, past chairman Himanshu Sharma ji, and if I could see, now I can see Rudramurthy sir also. So with these words, Chairman Dehradun branch of CIC of ICAI is not well. So I take, so we can understand because of this COVID, he is in recovery phase. So we miss his presence in this VCM, today's VCM. Now I request Rajesh Gupta ji, Rajesh Gupta ji, Vice Chairman Dehradun branch of CIC of ICAI, to kindly give his welcome address. Over to Rajesh Gupta ji.
Thank you, sir. Respected C. Anuj Goyalji, Central Council Member and Chairman CCMIP of ICAI. Respected CA Jay Chairaji, Central Council Member and Vice Chairman CCMIP of ICAI. Respected Dr. Amit Kumar Agarwalji, Secretary CCMIP. Respected Speaker for the day, CA Rudramurthy BVG, Founder, Director of Vachana Investments Private Limited. Members of the Managing Committee of Dehradun branch of ICAI and members of the Institute present in the VCM. I, CA Rajesh Gupta, on behalf of the Dehradun branch of ICAI and our Chairman Shri Rajneesh Agarwal ji, welcome you all to the present virtual meeting being held on the topic Options Trading Simplified, and hope that we all shall be benefited by the deliberations of our seasoned speaker. Thank you, sir.
Thank you, Rajesh Gupta sir, for your welcome address. And now I request Harshit Gupta ji, Treasurer Dehradun branch of CIC of ICAI, to kindly introduce our learned speaker, Rudramurthy sir. Over to
Good afternoon.
Harshit Gupta ji.
Good afternoon, respected seniors and fellow chartered accountants. It's an honor and a privilege to introduce a resource person who we all know and see in so many cases, CA Rudramurthy sir. He's a qualified chartered accountant and a qualified technical and analyst. Holds a CFT level 1 degree from IFTA USA. He also holds 5 degrees, namely MCOM, MFM, MPhil, PGDBA, PGDMM. He is the founder, director, and research head of Vachana Investment Private Limited. He often comes on CNBC TV 18, ET Now, TV 9, Public TV, and many more business channels as guest speaker, expressing his views on financial markets. He has been honored with the Nada Prabhu Kampa Gowda Award and Udaya Banu Vidya Ratna Award for his contribution to the field of financial education. He has also been awarded the Times Group for 2020 as Excellence in Wealth Creation for his exemplary returns in trading and investment. He has trained over 1 lakh real-time traders and investors in the field of investing and trading. Sir, it's an honor and privilege to share a dais and to introduce a faculty like you. I think we all look forward to a very resourceful session ahead.
Thank you so much. Thank you.
Thank you, Harshit. Thank you, Harshit Gupta ji. Now I request CA Rajat Sharma ji, Sikasa Chairman and past Chairman Dehradun branch of CIC of ICAI, to kindly introduce our worthy Chairman C. Anuj Goyal ji. Over to CA Rajat Sharma ji.
Thank you, sir, for giving me the opportunity. It is indeed my humble privilege to present a brief introduction of C. Anuj Goyal ji for the participants today. Sir is a true leader of our profession. Sir is a Central Council member of our institute. With his 14 years in council, 3 years in the regional council, 6 years in the branch, Sir has contributed immensely in various capacities for the cause of our profession. Presently, Sir is the chairman of Research Committee, the oldest committee of ICAI, the Capital Markets and Investor Protection Committee. He's also the vice chairman of Corporate Laws and Corporate Governance Committee. Sir has an exemplary academic record. Sir is a chartered accountant, company secretary, cost and management accountant, LLB, DISA, and DIRM. Sir, it is my immense honor, sir, to share the platform with you. And on behalf of Dehradun branch and the entire organizing team, I welcome you for today's webinar. And we look forward for a very learning session today. Thank you.
Thank you, Rajat Sharma, sir, for giving a brief intro of our worthy chairman. Before starting the technical session and ice-breaking session, I would like to urge my chairman few of the things that we have the worthy speaker with us today, none other than Rudramurthy sir, who is a member of our profession, and we have the presence of our chairman, C. Anuj Goyal ji. So I think it would be justified that today you draw a line where what is to be discussed in today's session and what is the expectations of our viewers from the learned speaker. So I think through your ice-breaking session, it's a part of any technical session. I think once you start in a good boundary, then you are not wandering here and there, and you are within that boundary, and your focus is on a particular topic. So our Rudramurthy sir is a very learned speaker. If we we want to see something new insight on a particular topic, and we have to drive out boundary line. Otherwise, he can speak 24 hours, and that would be very less for all of us. Because I know him personally, he is a very good speaker, orator, and the proud moment is he's a very, very good professional, and that too from CA fraternity itself. And my chairman, because I'm very fortunate that today we have a very, very learned speaker, as well as we have very, very, very experienced chartered accountant, company secretary, cost accountant, none other than C. Anuj Goyal ji, who is a member of all the three institutes, having vast experience in the council, the apex governing board of the Institute of Chartered Accountant of India, having 5th term in the council. He started, because why I'm explaining him as an experienced person and a good moderator and good person who can chair this session where Rudramurthy sir is one of the speakers. So none other than C. Anuj Goyal can do that justification to this topic. C. Anuj Goyal has served, he started his career at the age of 22 years when he was the member of all the three institutes. And at the same time, he joined ICAI, Institute of Chartered Accountant of India. He was serving the branch as branch managing committee member and various positions in the branch. You will be wondering to know that at the same time, he was the chairman of ICSI, he was the chairman of ICWA. So he knows the interdisciplinary knowledge of all the three institutions. So I think he will be the best session chairman of this topic, where Rudramurthy sir is one of the speakers. So with these words, I would request my worthy chairman, C. Anuj Goyal ji, for his ice-breaking session and opening remarks.
Thank you, Dr. Amit Kumar Agrawalji, our young and dynamic secretary of Committee on Capital Markets and Investors Protection, as well as Research Committee, and C. Amit Agrawalji we are having. I welcome on behalf of the Institute of Chartered Accountants of India and on behalf of Committee on Capital Markets and Investors Protection, and on behalf of very, very prominent branch of the Institute of Chartered Accountants of Central Region for the state of Uttarakhand, Dehradun branch, our honorable resource person, our honorable guest speaker, and I will say our brand ambassador of the Chartered Accountants in the capital market, CA Rudramurthy sir. And I'm quite confident when we are having the presence of Rudramurthy sir, I think we are going to get the best of the knowledge. And I think the role of the chartered accountants in the capital market is the need of hour. And for a country like India, if we have to reach to the 5 trillion economy target of the Prime Minister Modi very soon, I think very, very active role of the members of the Institute of Chartered Accountants of India, who are the best accounting professionals, and no professional can understand better the nitty-gritty of the capital market than a chartered accountant. I think Rudramurthy sir is the role model for all of us, and will certainly ensure that how more and more chartered accountants do take very active part in the capital market. And Rudamurthy sir, we are trying our level best to see that how we can have maximum number of programs in each and every part of the country. At present also, in today's program, we are around 6,000 chartered accountants live with us from each and every part of the world. And that shows the importance of the capital market for the chartered accountants, that on this working day, they are with all of us. And that shows your magnet, I will say, that each and every chartered accountant want to listen to our Rudamurthy sir. We are having the presence of our Honorable Vice Chairman, I will say Acting Chairman, Sri Rajesh Gupta ji. Rajneesh Agrawal ji, the Chairman, is not well, so I think very soon he will be with us actively. And we are having Rajat Sharma ji, our Honorable Past Chairman, Vimal Kishore ji, our Honorable Past Chairman of the branch, my brother Jasmeet Singh Chaudhary ji, our Honorable Secretary of the branch. We are having Dhan Kuber of the branch, Sri Harshit Gupta ji, and Himanshu Sharma ji, Honorable Managing Committee member of the Dehradun branch, one very prominent branch of the central region. And it was the only branch of Uttarakhand. I was a part of the Dehradun branch only when I was at Haridwar. I was born at Haridwar. I started my schooling at Haridwar, and I did my graduation also from Haridwar. And I did my CMA from Dehradun, because at that time only at Dehradun, Uttarakhand was the examination center of the ICAI. So I am practically the product of Uttarakhand. I am the product of the Dehradun. So on behalf of all the leaders of the profession from the Dehradun and from each and every part of the country, I welcome once again Rudamurthy sir. And this very important topic he is going to take, option trading simplified. And friends, the Institute of Chartered Accountants of India, through Committee on Capital Markets and Investors Protection, is trying its level best to see that how the role of the chartered accountants can be enhanced like anything. Rudamurthy sir, we have taken one small but very important decision in the very first meeting of Committee on Capital Markets, that now the chartered accountants who are in full-time practice, actually COP is very close to our heart of the chartered accountants. That's a problem. And I always say that और भी गम है जमाने में COP के सिवाय है, पर उसके बाद भी the chartered accountants do have that charm for the certificate of practice like anything. So now what we have done, that now the chartered accountants who are in full-time practice, Rudamurthy sir, now they can very well have the income from equity derivatives. If Rajat Sharma ji do have the 100 crore rupees income in a particular year from equity derivatives, he can very well be in practice with his father, and he can very well have the income from equity derivatives. When Rudamurthy sir is here, we will not discuss any figure below 100 crores. So that is for sure. So that decision has been confirmed by the Central Council of the Institute of Chartered Accountants also. So that shows the importance of the capital market for the chartered accountants and how important the chartered accountants are there in the capital market. Friends, before I start, let me share one of my favorite quotes by a renowned personality. Anyone who is old, whether at 20 or 80, anyone who keeps learning stays young. And I think Rudamurthy sir is one example that he's not learning. He's not only learning, but also that imparting the knowledge to each and everyone. So dissemination of knowledge is, I think, one of the very important thing. कहते हैं ना, विद्या का दान सबसे बड़ा दान होता है. तो जो आप विद्या का दान कर रहे हैं, I think it is very important for all the chartered accountants particularly. So we are really grateful, sir. Keeping that in mind, we at ICAI regularly thrive state and esteemed members in enhancing their professional competency and growth through conducting various knowledge enriching webinars and VCMs on contemporary topics, even in these challenging and trying times of COVID. And friends, the Committee on Capital Markets and Investors Protection is having a very prestigious national conference on 5th of July to 8th of July, 4 days national conference, hosted by Dehradun branch and Haridwar branch and other branches. And we are expecting 20 to 25,000 chartered accountants in this national conference. and we have requested, of course, to Rudumurthy sir also to have the first technical session of that national conference, so that I think the best beginning, good beginning is the best beginning. So I'm quite confident that when Rudumurthy sir will be there in the very first technical session of the conference, it would be really a wonderful experience for all of us. Friends, the Committee on Capital Markets and Investors Protection has been entrusted with various responsibilities like providing suggestions on various bills, regulations, notifications, circulars, and other documents relating to capital market for submission to the government regulator, initiating research studies in the field of capital market and investors protection, conducting training programs for members and others on matters relating to capital and commodity markets. The Committee on Capital Market and Investors Protection works in the area of promoting investors protection by nurturing capacity and competency development of members and stakeholders in the capital market. The committee will be actively working in the area of financial literacy for the development of economy through various initiatives to educate and empower citizens. The committee also works to develop competitive workforce for capital market and corporate through its various learning initiatives like workshop and training program on capital market. It conducts 2 flagship certificate courses for professional development of members in the field of forex and treasury management and derivatives. Rudumurthy sir, we have recently launched 2 online certification courses specifically for the members of the Middle East. We are having a strong presence of the chartered accountants. Around 20,000 chartered accountants are there in the Gulf countries. So a specific batch on the forex and treasury management, keeping the members of the Gulf countries in mind, we have launched last week only 1 batch on forex and treasury management and 1 batch on derivatives. So we are trying our level best to see that our chartered accountants who are in India and who are outside India are equally competent, because they are also the brand ambassador of the chartered accountants of the Institute of Chartered Accountants of India in other parts of the world. And we look forward for the very, very active networking of the chartered accountants who are in Uttarakhand, who are in Dehradun, who are in Haridwar or in other parts of the country, with the chartered accountants who are there in other parts of the world. And in this webinar, we are having around 6,000 chartered accountants, and I think more than 1,000 chartered accountants are from other parts of the world. So that showed their active participation in our endeavors. And it is for a PM here. You never know. In other parts of the world, it can be early morning, it can be late night also. Friends, capital market in India have witnessed tremendous growth in past few years. More so, the impact of COVID has taught us the significance of our physical as well as financial health. Investing in various segments of capital markets with proper knowledge is the need of the hour. New investors are entering into the direct equity as well as derivatives segment, which is often considered complex as compared to the former one. On a conceptual note, a derivative is a financial contract between 2 or more parties that gets its value, risk, and basic term structure based on an agreed upon underlying security or set of assets. There are various types of derivatives in which a person can trade, such as options, swaps, future contracts, forward contracts, etc. In today's VCM, our endeavor would be in understanding nitty-gritties of option trading in a simplified manner. And we are having the presence of Rudumurthy sir, who is the expert in the field of the capital market. Friends, options trading may seem overwhelming and a bit technical at first, but it's easy to understand if you know a few key points. An option is a contract giving the buyer the right, but not the obligation to buy in the case of a call or sell in the case of a put the underlying asset at a specific price on or before a certain date. Options, just like other derivatives, are used for income generation, speculation, and mainly to hedge risk. The option market makes up for a significant part of the derivative market, particularly in India. It is significant to note that nearly 80% of the derivative traded are options, and the rest is attributed to the future market. Though the option market has been around since 2001, the real liquidity in the Indian index options was seen only in 2006. Correct me, Rudumurthy ji, if I am wrong. There are various aspects of option trading which needs to be understood before one decide to invest in it. Therefore, through today's VCM, our aim is to throw some light on the understanding, interesting technical teach of option trading in a lucid manner. Now, without taking further time, I would like to welcome our learned and experienced speaker of the day, CA Rudramurthy BV, Founder Director, Vachana Investment Private Limited, to enlighten our knowledge and fine-tune our concepts with his rich experience and wisdom on today's VCM on option trading simplified. I believe that this session will be very fruitful and productive for the participants. And as I conclude, I would like to request all of you to take necessary precautions, even though the unlock process is going on. Do not be lenient and take proper care of yourself and your family members. Also, kindly take vaccination as suggested by the government and take best actions to safeguard the business and economy against this COVID pandemic. Stay safe, stay healthy, and best wishes. So now, without taking further time, I once again welcome our honorable guest speaker, CA Rudramurthy sir, and I'm quite confident that all of us will have a great experience with his television. Thank you very much, friends.
Thank you, Chairman sir, for your nice words of wisdom. And we have the learned speaker Rudramurthy ji with us. So not taking much time, as the participants are eager to listen him. So I would request Rudramurthy sir to kindly deliberate on the topic.
Thank you so much. And it has been an honor, privilege to represent our fraternity of chartered accountants. And it's a dream come true, I can say, or even I'm now pinching myself to see whether am I live here and addressing to this August gathering. People like Anuj Goyal sir, a chartered accountant, a cost accountant, a company secretary. He has left no professional qualification unturned. I say no stone has been unturned by him. And look at people like Amit Kumar, the secretary, and everyone who are present here, Rajesh Gupta, Rajesh Sharma sir, Himanshu, so many of you are present here. For me, this is an occasion to tell people that chartered accountant is the only source of the great learnings, practical learning, and the service to this proud country called India happens through chartered accountant. And when I did my CA, I was just from day one, I was into capital market, and I never took COP, my practice certificate. I never ever worked in a company also as a chartered accountant. From day one, I should be the only chartered accountant who has not practiced nor worked as a chartered accountant. But then this beautiful field of stock market, and specifically today I'm asked to address on options. I will say we have a lot of options in option market, but today I will give you a lot of practical insights on how options market work, how one can be an option buyer or an option seller, how one can do hedging in option market, and at the end of the day I will tell you practically how you can trade in options and create another source of income. In fact, let me start my today's session with a small story. A saint goes to Bill Gates and he says, making money is nonsense. He says, Bill Gates, you have simply made so much money. What is the use? You don't have peace. You don't have spirituality. You don't have happiness. What is the use of making so much money? He says to Bill Gates, making money is nonsense. And in fact, Bill Gates, after listening to him, he replies back, he says, you make enough money before talking such nonsense. And let me tell you, making money is good. And people today confuse making money to spirituality and think you can't make money if you want to be spiritual. And if you want to be highly rich person or you're money-minded person, then you can't be spiritual. Let me tell you, spirituality is abundance. It is not scarcity. And today people have come to a mindset, and especially in COVID times, like if you want to be healthy, then you can't be wealthy. Or if you want to be wealthy, then you can't be healthy. This is all to do with mindset. I say, forget the or life. It is not healthy or wealthy. I say it is healthy and wealthy. It is not or life, it is and life. You can be healthy and you can be wealthy. And let me tell you, empty pocket cannot serve. In fact, I say empty vessel cannot serve. If you want to serve, you require money. And let me tell you, the highest charity contributors today in this country and in this world are the richest people of this world. Empty hand, empty vessel cannot serve. And I always say making money is good, and ethics should never be preached. It has to be practiced. And my session here is not to talk on ethics, neither to preach. You will just see the practice all around. And let us start directly the session of option trading. My kind request to the August gathering, and I have to welcome all my fellow chartered accountants who are watching this program in thousands of numbers. And you are there not just in one small place, you are there across the cities of India, and you are even there outside India. What more I can expect in return for this entire session, what I will deliver to you guys on option trading simplified. Any questions, whatever you have, I want you to please make note of them. Allow me a time of about 45 minutes to an hour's time to complete my entire presentation. And after my presentation, in fact, I would request one of the August member or the organizers here to pick up the questions from audience and then ask me, and I will shoot the answers back to all those questions. But during this program, my kind request till I complete my presentation that you will allow me fully in one stretch to complete my presentation. And I've also shared my presentation to the member here, the organizer committee here. If anyone wants an access to it, you are fully free to take that presentation. I don't claim any intellectual property right, nothing. And in fact, I don't want you to write anything which comes on the presentation. I want you to focus on my talk, ask more and more questions and challenge me. But I always know the popular statement of Abraham Lincoln. He says, if I have a dollar, you have a dollar, we both exchange the dollar, we remain or we go back with the same $1. My $1 goes to you, your $1 comes back to me. But end of the day, we remain with the same $1. But if I have a thought and you have a thought and we exchange our thoughts, you go back home with 2 thoughts and I go back home also with 2 thoughts. And we have a lot of thoughts to interact and exchange today. And it's my honor and privilege, being a proud chartered accountant, to address in front of this fantastic gathering and the entire committee of capital market and the team here of Dehradun chartered accountants. Everyone here have done a fabulous job, and I really want to appreciate them and thank them for giving this wonderful opportunity to share the thoughts what we have across and learn together. Don't call me Rudramurthy sir, just call me Rudra. I am never a master. Market is always the master, and we are always the learners from market. So let me just begin the session and share my presentation. And I would appreciate people have a book and pen, make some notes in terms of whatever I explain, which is not there in presentation. And you get any questions, put it in the last page of your material and shoot them when we have the Q&A session at the end. So I will just start the presentation and let me share my screen. Thank you. So option trading simplified. And the first question I want to ask you guys, do you want to know whether option buying is more profitable or is it option selling which is more profitable? And even if you know nothing on derivative, nothing on options market, it is my promise, stay till the end. I will ensure you people are far better than where you are starting today in terms of option market. And I'll make this subject very, very simple and practical for you guys. Now, if you want to know whether option buying is more profitable or option selling is more profitable, let us first jump and understand the beautiful world of options and derivatives. Now, I will also tell you, this is not a get rich quick adventure scheme, but this is also not a false promise. And I'm telling you, one can look at making consistently a 2 to 3% kind of a monthly return if you can understand options very well, and I'll even discuss how to do hedging in option and complete practical viewpoint on the same, I will share with you guys. And very brief introduction of Rudra, so that you know Rudra better, you will understand Rudra's words better. I'm an author of Amazon #1 selling book, Mind Market Money. I was the only Indian who was there, recognized as one of the top 5 world's best trader trainers by Online Trading Summit. And I do come as a guest speaker in various business channels, including CNBC, TV 18, ET Now, and many more. And more than all this, I love to share the small knowledge what I have with August gathering and my CA members. What do you get from this today's webinar? I will focus on 5 important topics. What is derivative market? What are futures and options? Option buying, option selling, and finally we will talk on hedging. Now, this is the first slide I always love before starting derivative market. Why people don't become rich? I know I'm talking to a super rich audience here, but then this was a question which was asked to Warren Buffett. Buffett was asked this question, why people don't become rich? And Buffett, who is 90 plus years old, and the whole world today looks at Buffett as a role model when it comes to stock market. And Buffett answered this question so beautifully. He said, people don't become rich because no one wants to become rich slowly. In fact, everyone wants to become rich tomorrow morning. They want to become Warren Buffett. They want to become Mukesh Ambani without giving any time. And this is the #1 reason why people don't become rich. So the simple secret here is, if you want to become rich, you have to give time, and you have to understand power of compounding works only when you give time. And let me tell you this statistics. Warren Buffett made less than 5% of his wealth at the age of 56 years. The rest 95% he made only after the age of 56. And this is what we mean by power of compounding. If I have to simplify this, it might take for someone 40 years, 50 years to make his 1 crore. But it may not take 80 years to make his 2nd crore. That is the power of compounding. And let me tell you, the second important reason why people don't become rich or super rich, or to the extent of their real talent, they don't actually become rich, because people want to become rich by doing nothing. I say, if you do nothing, you get nothing. You have to put in at least the smart work, and life is too short to learn everything on our own. If we can learn through experiences of others, and if we can invest on ourselves, that gives us the big return on investment. Buffett says this beautifully. He says, investing on yourself gives you the highest ROI compared to any other asset class. So the highest return on investment you get is always when you invest on yourself. Now, let me go to the subject of derivatives. Guys, I don't believe in giving too much of definitions and boring you with theory. And I want you to enjoy this session and learn with a lot of fun. And I want you guys to see whether have you progressed from where you started this session at 4 p.m. Now, let me tell you what is derivative. A very, very simple example of derivative market I'll give you. I have a gold ring in my hand. The gold ring what I have in my hand is worth 50,000. I also have a steel ring with me. The steel ring is only worth 50 rupees. Gold ring is 50,000.
Sir, you have stopped the PPT sharing?
Yes, I did it so that I am more visible and people don't sleep. Okay, thank you. Now, as I told you guys, I have a gold ring with me which is 50,000, and I have a steel ring which is 50 rupees. Both are ring. But how come a gold ring is costing 50,000 and another ring which is also ring, but it is only 50 rupees? So I want you to write an answer in chat box if you can. Tell me why, when both are ring, why is a gold ring worth 50,000 and why is a steel ring worth only 50 rupees? Why is such a huge difference in the ring price? So if you can write to me on the chat box.
Rudra sir,
okay, chat is not
Rudra sir, our honorable members who are live with us are not having access to the chat box.
Okay.
So they are on the different platform.
Okay.
So they can't interact through the chat box. That's the problem.
Okay. So how do they
in that
ask
chat
me
box
questions at the end?
only 5-6 of us. But they are sending us the questions. We are having a separate Q&A box, and after the end of your deliberation, we will be having the query. I will be asking the query, and then you can respond.
Super, sir. I get the things, and thank you for that, Anuj sir. And I thought I'll keep the session interacting through the chat, but anyhow, I will still manage. And let me give you the answer. And as I was talking to you people, the steel ring, whatever I have in my hand, is worth 50 rupees, whereas the gold ring is worth 50,000 rupee. The difference is because of the underlying asset. Gold ring is made of gold, whereas a steel ring is made of steel. And let me tell you, the name itself says derivative. Derivative are financial instrument whose value is derived from underlying asset. What do I mean by it? Very simple. If the gold value goes up, the gold ring value also goes up. If the gold value comes down, the gold ring value also comes down. In fact, let me tell you, ring does not have any independent value. Ring only has a dependent value. Now, what do I mean by this? Very simple. The name says derivative. They derive their value from underlying asset. And in fact, derivative instruments, they don't have any independent value. They only have a dependent value, and the value of a derivative instrument is dependent on the value of the underlying asset. Why a steel ring is worth only 50 rupees and a gold ring is worth 50,000 rupee is because the gold ring derives its value from the underlying asset gold, and the steel ring derives its value from the underlying asset steel. Similarly, if I now talk futures and options, which are derivative instruments, if I say Infosys future does not have any independent value. The value of Infosys future is derived from the value of Infosys in equity market. So in equity market, which is the underlying asset, if Infosys value goes up, Infosys future value will also go up. If Infosys value comes down, Infosys future value also comes down. In fact, let me tell you, Infosys future has no independent value. It only has a dependent value, and the value is dependent on underlying asset, which is spot market or cash market. As Infosys goes up, Infosys futures also go up. As Infosys comes down, Infosys future also comes down. In fact, when I talk even commodity market or currency market, it is the same as derivative market. The only difference is in underlying asset. Now, when we talk commodity market, we say gold futures, we say crude oil futures. Now, what's the difference between an Infosys future and a gold future or a crude oil future? The difference is only in the underlying asset. In gold future, the underlying asset is gold value. As gold value goes up, the gold future value goes up. If gold value comes down, the gold future value also comes down. Similarly, currency market. When we talk currency market, we talk in pairs. We don't say just dollar. We say dollar versus INR, Indian rupee. We say dollar versus euro. We say dollar versus pound. So we talk in pairs. And generally, if I say only dollar future, it is understood the local currency here is Indian rupee, INR. So when I say currency market, what is the difference between a derivative commodity and a currency market? The difference is in underlying asset. If dollar value goes up, dollar future value goes up. If dollar value comes down, dollar future value will also come down. So to make it so crystal clear, derivatives, as the name says, they derive their value from underlying asset. They don't have any independent value. They only have a dependent value, and that value is dependent on the underlying asset. And whether you talk derivatives, you talk commodity, you talk currency, everything shares the same logic except the difference in underlying asset. Now, I want to make this very important statement of Warren Buffett right at the beginning. In fact, Buffett made this statement. He said, derivatives are financial weapon of mass destruction. And when I saw this, I was just feeling you should never come to derivatives, because a man with such an experience in derivatives, Warren Buffett says, derivative are financial weapon of mass destruction. And you can see the hand on his head and also a gentle smile which is there. And if you can see that gentle smile, is indirectly telling, if you don't know derivative, you will lose all your money. It is a financial weapon of mass destruction. But if you know that well, you can make a hell lot of money. In fact, Buffett today makes 1/3 of his annual money only through option trading. And here we have the news, a look back at Warren Buffett, $37 billion derivative deal. Buffett has made use of derivatives to boost returns of Berkshire Hathaway investors. So Buffett is one of the largest person in terms of trading in derivatives, but he uses it for longer term options, for hedging, and it is a tool which you can use it versatilely, whether as a speculator or a trader, or you want to do it for hedging, it can be used. It is so flexible tool. And the same Buffett makes billions of derivative deal, and that also adds to the returns of Berkshire Hathaway's investors. And let me now tell you, as I've just explained, derivatives are financial instruments whose value is derived from underlying asset. And when we say derivative, in India especially, we have futures and options which are traded, and that's the reason why we even call derivative market as a F&O market. However, we even have other derivative instruments like swaps, swap options, we have forwards, so many more derivative instruments. But then today, even though I have to focus only on options market, I'll also just give you some background of futures so that you understand options market much better. And in India, popularly we trade these two instruments, namely futures as well as options. And that's the reason why we call derivative market even as F&O market. Now, let us look at future trading. Very simple. If you want to understand futures market, I don't want to waste time talking definition. A future is a derivative product, blah, 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 blah. We are all already qualified chartered accountants, so we don't have to write any exam. I will tell you practically how derivative market works and how future works. For that, I'll be sharing my live market screen to you guys. And this is my live trading terminal. Are you able to see my trading terminal? If someone can confirm me, yes. Okay, thank you. Thank you, Rajesh. I can see you with a thumbs up. Thank you so much. Now, I want you to understand these things very clear. Now, on my screen, you can see Nifty futures. This is Nifty futures, whatever I'm showing. I'll just press F1 and you get a buy terminal like this. Now, I'm practically showing you how futures work. And it is very simple. It's a child's play. And let me tell you, I will make it a child's play for all those who are there in this session. Superb session organized by Committee of Capital Market for all chartered accountants throughout the world. And stay till the end. You will have so much to take away from this program. Now, what I'll do is, before I go to futures market, I will just give you a brief introduction and then show you how live it works. But let me tell you, a futures market is very simple. It is not as complicated as option. Option is also simple. And before we go there, I want you to understand in futures market, what we do is very simple. If you are bullish on the underlying asset, you feel, for example, Infosys will go up. I will simply go and buy Infosys futures. And if I feel Infosys will come down, I will go and short Infosys future. I'll come to this long and short after some time, but let me tell you very simple strategy. The simplest strategy is, if you feel underlying asset price will go up, you buy the future. If you feel underlying asset price will come down, you sell the future. Now, the $1 million question people ask me is, how do we know whether the underlying asset will go up or come down? Yes, that is where learning of technical analysis and fundamental analysis is important. Let me tell you, there is nothing certain in this world except death and taxes. And only in America, death and taxes are certain. In India, there is only one thing which is certain, that is death. Taxes are also uncertain. But let me tell you, if everything becomes certain, then there is no opportunity. And if there is no opportunity, how can you make money? We have money-making opportunity only because market is uncertain. We don't want to be right in every trade we make, but we want to make money overall. Let me tell you, the first rule of trading I want to tell people is learn to take small loss, or else you have to take mother of all losses. And if you think you are bigger than market and you think that I will be right every time, you will lose money to market. Even Rakesh Junjunwala, who is also a chartered accountant, who is considered as Buffett of India, 60-year-old, he makes a lot of mistakes. He has bought a lot of wrong investments. He has made a lot of wrong trades. But overall, he has made money. From 5,000 rupee, where he started, today is worth over 1 lakh crore. 1 lakh crore I am talking. And this money he has made through market and through the power of compounding. In fact, you just do this small exercise, whatever I am telling you all. If you see the list of top 10 richest people of India, the youngest person in the top 10 richest people is Kumar Mangalam Birla, whose age is only 56 years. So the rule for becoming one of those members of top 10 richest people is you have to be at least 50 plus, or 56 is the youngest age. You know why? Because of power of compounding. And let me tell you, if you understand this F&O market well, and if you understand trading psychology better, and you have to understand wealth is created through investing, not through trading. And this was one of the beautiful questions asked to Radhakishan Damani. He is the owner of DMart and is the guru of Rakesh Junjunwala. And Radhakishan Damani was asked this question, what is the difference between investing and trading? He answered it beautifully. He said, 95% of my wealth is made through investing. Only 5% came through trading. I repeat, 95% of my wealth, today's wealth, is made through investing. Only 5% came through trading. But, listen to this carefully, but the capital required for that investing, which created 95% of wealth, came through trading. I repeat again, but the capital required to make that investing, which gave that 95% wealth, came through trading. So trading gives you profits, using which you invest into good stocks for long term and make your wealth. Let me tell you, unless you are born with a golden spoon and your father says, okay, take my 100 crore and just invest in great long-term stories, then you can take that money, invest on long-term stocks and sleep. But people who start with zero capital or with very small savings of their own and they have to build their capital, you have to do it only through trading. Rakesh says this beautifully. He says there are many speakers who say not to do trading, don't do trading, do only investing. They keep suggesting, but they are the biggest traders and gamblers who don't disclose. And he says it beautifully. He says, my papa says not to drink whiskey, but he drinks whiskey every day. I'm not recommending to drink whiskey nor I drink, but I'm only telling you, understand trading is not something wrong, but it requires a lot of psychological strength and understanding the realities of trading in order to be successful in trading. In fact, the odds of succeeding as a trader is very, very less, but as an investor, it is very high. And let me tell you, to succeed in trading, what is required? Rule number 1, learn to take small loss. If you are wrong, accept it. Respect market, take small loss, get out. I always tell people, buying Suzlon at 200 rupee was not a mistake. Not selling Suzlon at 180 rupee was a mistake. And now at 7 rupee asking what to do with Suzlon is the biggest mistake. You can't be right on every stock you trade or every stock you invest. Making money overall is important. Rakesh bought A to Z maintenance at 400 rupee. Today it might be at 4 rupees. He had even bought DHFL at 600 rupee. Today the stock is worth 0. But then overall, he has made money. Look at his stock like Titan, Crisil, Lupin. They have all given him multi-fold returns. But then where did he get capital to buy huge quantity of Titan, which is his investment stock? It came through trading. So derivatives requires understanding of the short-term movements in market and learning these skills, whatever I have told, risk management, technical analysis, all this will help you to determine whether the asset is expected to go up or the asset is expected to come down. So our discussion today will not be on how to say whether Reliance will go up or come down, how to say whether Infosys will go up or come down, how do we say whether gold will go up or come down. No, our discussion is on derivative market, specifically on options. But let me tell you, futures is very simple. If you expect the underlying asset to go up, buy futures. If you expect the underlying asset to come down, sell futures. Now, how do we do this? I will show you practically. Let me just share my screen back again. Now see this carefully. I'm just showing you example of, let us say, Reliance only. Now, Reliance, I'm just showing you on my screen. You can see the first one on the left-hand side, quantity. Can you see 250 as a quantity which has come here by default? Yes. Now, this 250 is what we call as lot size. In futures market, you can't buy one Reliance. You have to buy in lot. One lot of Reliance is 250. You either buy 250 Reliance or 500 or 750 or 1000. So in multiples of 250 you can buy, because we follow the concept of lot size. Now lot size is determined by exchange. So here NSE determines the lot size and they have a formula for all that. We are not interested to know it. But I will tell you here, in equity market, I can even buy one share of Reliance. But in futures market, you can't buy one Reliance future. You have to buy 250 Reliance future, which is one lot, or in the multiples of the same. Now, you can also see here something called as expiry date. So I'm just clicking that. You can see the expiry date is 29th of July. What is this 29th of July? Derivative market has an expiry date. Last Thursday of every month will be the expiry date. So for example, if you see the month of July, last Thursday of July month will be 29th of July. Let me just check my calendar on my screen. Yes, go to July month, not June month. And if you see the last Thursday of July month, just check and let me know, am I right? Yes, the last Thursday is on 29th of July, correct. Now, similarly, if you go to next one, August month, so the near month is July, middle month is August, far month is September. Look at August month calendar and tell me when is the last Thursday of August month. It will be 26th of August. And if you go to September month, the last Thursday is 30th of September. Sometimes what happens, because of a national holiday, if exchange is closed on last Thursday of that month, then expiry will not happen on last Thursday. It will happen one day before. I'll give you an example. Let us say January 26th. You have Republic Day and market is closed because of Republic Day, and that were to be a last Thursday. In that case, expiry will happen one day before. It will be on 25th of January, which will be, instead of last Thursday, the last Wednesday. I still remember my teacher used to teach me derivative, and when I was a student learning through textbook, for the first time, my teacher used to tell, imagine, for example, August 15th was the last Thursday and market is closed because of Independence Day. And if last Thursday were to be a holiday, when will be the expiry date? We all wrote the answer August 14th. We all got marks, but only today I can laugh at it, because August 15th can never be the last Thursday of the month. And I can only say, you can give an example practically, provided you understand the subject practically. That is the difference between my mother preparing a beautiful vegetable palav with her experience and my wife preparing vegetable palav, reading a book on how to prepare a beautiful recipe. There is a huge difference. In fact, my mother has experienced and she has experimented it a lot on my father, and she has gained so much of experience, and my wife has to still experiment and gain that experience in coming days. And I have that experience because market has taught me in last 17 years everything punishing through price called money, which has been lost. And then you see the beautiful world of making money. And this can happen with the practical learning what you get. Now, getting back, this is near month, middle month, far month. Now you might ask me a question, sir, we are still in June. How come you have already gone to July as near month? In fact, yesterday was expiry for June month contract. You know, June month contract should expire when? Last Thursday of the month, and yesterday being the 24th of June. We had the expiry date, and today July month contract has actually started. And now what happens is, the moment we have 29th of July done, on 30th of July what happens? You will have August as near month, September as middle month, and you will have October as far month. So as one contract expires, the another contract gets added. And always liquidity and more volumes will happen on near month contract. Lesser volumes will happen in middle month, and far lesser volumes will happen in the far month contract. Now, after knowing this lot size, expiry date, which I have just explained to you, what is next most important to learn in case of futures market is understanding about margin. If you know this one word called as margin, I'm sure you know everything on futures. With this, I can tell you how futures work and then move to options. Now, getting to futures contract back, these are the terminologies I want you to get clearly. Point number one, lot size, which we have already discussed. Reliance lot size is different. Nifty lot size is different. Infosys lot size is different because all of them don't trade at the same price. In fact, Nifty has a lot size of 75. Reliance has a different lot size, 250. Infosys has a different lot size. We don't have to memorize those numbers, but I can tell you, you have to buy or sell only in lot size. Expiry date, you understood last Thursday of every month is the expiry date. You have near month, middle month, far month contract. Last Thursday were to be a holiday, expiry happens one day before. Now, what is this margin? Let me explain this beautiful concept of margin. And if you know this, you know what is leverage and you know how futures market work practically. Let me share my whiteboard and explain to you this margin. And I will make it so easy for you. Let us understand this with this example of equity market and futures market. Now, let us say we have two people, and just for the sake of example, I'm just taking for equity market, I will take Anuj sir as an example, and for futures market, we will take Rudramurthy as an example. Both of us, we have a capital of just 1 lakh. This is just for example I'm taking. So I have 1 lakh capital. Anuj sir also has 1 lakh capital. So I want to trade in futures and Anuj wants to trade in equity. So both of us have 1 lakh capital. And just for example's sake, I'm taking this. Let us say right now, Reliance Industry is trading at, let us say, 2,000 rupees. This is the price of Reliance Industry. Anuj will decide that he wants to put his 1 lakh on Reliance in equity market. Now you tell me how many shares can Anuj buy? He has 1 lakh capital. Each share of Reliance is 2,000. And a very simple mathematics tells to you that he will be buying 50 shares of Reliance. So the same, if you look at Rudramurthy, so I'm not calculating brokerage and other transaction cost here. This is just for learning sake. I've taken this example. So Anuj has bought 50 shares of Reliance in equity market. Now what will Rudramurthy do is he wants to buy Reliance future. Both are bullish. So Rudramurthy will not go to equity market. He will go to future market. And in future market, we have 20% margin. This is called initial margin. So we have 20% margin in order to take Reliance future. Now, what is this 20% margin? You don't have to pay full 2,000 rupees to buy Reliance future. Just pay 20% margin as upfront commitment. Now, what is 20% of 2,000? If you calculate that, 20% will be 400. So just by paying 400, I can buy one Reliance future. So with the same capital of 1 lakh, Tell me how much Reliance future can I buy? I can buy 5 times more than Anuj, which will be 250 quantity I can buy. So I also have the same 1 lakh capital, and Anuj could buy only 50 shares of Reliance in equity market with 1 lakh, whereas I could buy 250 quantity of not Reliance future, which I could buy because I don't have to pay full money. The margin for Reliance, which they're asking, exchange is asking, is only 20%. Now, if I have 1 lakh with me, 250 quantity I could buy. Now, follow this carefully. I'll continue the example. So you now know in equity market, Anuj has 50 shares of Reliance, whereas I have 250 quantity of Reliance future. This is Reliance in equity market now, and we both bought when Reliance price was 2000. Let us say Reliance goes up to 2100. Now if Reliance goes up to 2100, what happens to Anuj? He has 50 share, multiply by 100 rupee profit what he is making on each share of Reliance, so he makes a profit of 5000 rupees. Now see Rudramurthy, with the same 1 lakh capital, I had bought 250 quantity of Reliance future because the margin was only 20%. Now I make a profit of 100 rupee on my 250 quantity. So if you now calculate and see what is the profit I make a profit of 25,000 on the same capital. On 1 lakh investment, Anuj made 5,000 profit. So his ROI, return on investment, is 5%. For 1 lakh capital, he made 5,000 rupee, whereas Rudramurthy's return is 25%. I have the same capital of 1 lakh, but I made more money than Anuj because I traded in futures, whereas Anuj traded in equity. So all of you will now say, fantastic, Rudramurthy made more money than Anuj. With same capital, I made a ROI of 25%, but Anuj made only 5%. And you'll all say future market is better than equity market. But let me tell you, this is how I learned, but later practically understood, I am wrong. You know why? Instead of Reliance going up from 2000 to 2100, if Reliance comes down from 2000 to 1900, what happens? Anuj will only lose 5,000, whereas Rudramurthy will lose 25,000. Anuj will only lose 5% of his capital, whereas Rudramurthy will lose 25% of his capital. Now let me give you the golden statement and the big learning. Someone asked me, what is the difference between equity market and F&O market? I just gave him an answer for joke. I told, in equity market, you lose money slowly. In F&O market, you lose money fastly. He was just laughing at me. But let me tell you, if you understand now, I also learned this when I was a student of CA, that leverage is a two-edged sword. But never understood what do you mean by leverage is a two-edged sword. Now I am telling you, leverage is a two-edged sword because if you are right, it will increase your profit. If you are wrong, it will increase your loss. Let me tell you, you have to buy Reliance future only when you are more sure. You have higher conviction that Reliance will go up, or else better to be in equity market and not to come to futures and option market, because leverage maximizes your profit or it will maximize your loss. In fact, someone told this statement, derivative markets are so beautiful, it will maximize your return and minimize your risk. Wrong. No product in this world in the field of finance can give you highest return with the lowest risk. Not possible. But let me tell you, not taking risk is the biggest risk of life. I will repeat. Not taking risk is the biggest risk of life. You have to always take calculated risk and not foolish risk. Now, what is calculated risk? Risk what I can bear, risk what I can withstand. That is what I call as calculated risk. And what is calculated risk to me can be a foolish risk to someone else. And what is calculated risk to him can be a foolish risk to me. So taking a risk which is calculated risk is very important to make money, and leverage is a two-edged sword. Futures market will give you leverage which is not there in equity market. In equity market, I have to put full 100 rupees to buy or sell what I want, whereas in futures market, I put only margin. I don't know if you can understand. In this example, what I gave between Anuj and Rudramurthy, I got 5 times more leverage. How did that happen? Because margin was 20%. Formula simple, 100 divided by margin. So 100 divided by 20, I had 5 times leverage. What is this 5 times leverage? I make 5 times more money than Anuj if I am right. But I lose 5 times more money than Anuj if I am wrong. Now let me tell you the wonderful, beautiful subject of currency market. You will be shocked to know this. If you trade in currency, and if $1 today, I'm just taking it for example, if $1 today is, let us say, 75 rupees. If you want to buy dollar future, the margin asked is 0.5%. For simplicity, I will take it as 1%. In fact, most of the currencies have this huge leverage and the margin asked is only 0.5% to 1%. What do you mean by this? I don't know if you can get this example. So if I give you an example of currency market, if $1 is today in spot market, let us say at 75 rupees, if you want to buy futures, margin is 1%. That means you can buy $1 future just by paying 0.75. This is the only case where your rupee is costlier than dollar. So $1 is available for 0.75 rupee, but not dollar. I'm talking dollar future. Now see the leverage. The leverage here will be 100 divided by 1%, which is the margin. You have 100 times leverage. What do you mean by 100 times leverage? If $1 from 75 goes up to 75 rupees 75 paisa, just an increase from 75 to 75, your money is doubled. You make 100% return if you buy a dollar future at 75 and it goes up to 75, because you have 100 times leverage and you are just paying 1% margin. But the same $1, if it comes down to 74 rupees 25 paisa, and if you have bought dollar future, your account will be closed because you have lost all your capital. That is the leverage effect you have in currency market. A 1% move in currency will either make your money double or it will make your money zero, because margin is so small, the leverage effect is very high. But let me tell you why currency practically has so much small margin, because hardly in a day it will move 20 paisa, 5 paisa, 10 paisa. But why margin for Reliance is more at 20%? Because the volatility of the underlying asset is more. And all this for me is like how to prepare vegetable palau to my mother, because day in, day out, I breathe, I sleep, I walk, I think, I dream only our stock market. So that is what I do. And let me tell you, leverage benefit comes because of margin. And futures market gives you that margin and the leverage effect. But do understand, leverage is a two-edged sword. If you are on the wrong side, you will be killed. That's the reason why Buffett told derivatives are financial instruments of mass destruction. Why did he use that word? Because people don't understand that leverage is a two-edged sword, and if they're on the wrong side, they just get sacked and killed. So that is where you have to understand. I asked this question to Rakesh ji, and I asked him, according to you, what is the #1 trait of a successful trader? And Rakesh Junjunwala told, the best trader knows how to manage his leverage very well. He said he knows when to take leverage and when not to take leverage, and he knows by how much leverage he has to take and by how much he should not take leverage. So how much leverage and when to take leverage is very, very important. It is not in your analysis of calling the stock right, movement right, all that is required. But the fine tuning comes in understanding the power of leverage, and it works either side. If you are on the wrong side and you don't manage risk well, you will be killed out of this market. So this is what futures market is all about. Let me just fastly go through another two terminology. All this is even used in option market. That's the reason I'm referring it to here. Leverage you understood, margin you understood, lot size done, expiry done, mark to market. Now what is mark to market? Whatever profit or losses you make on a daily basis, the money is credited or debited to your account, and the position will be taken fresh from next day. I'll give you an example. I bought Reliance future at 2000. Reliance went to 2100. That 100 rupee profit will be credited to my account immediately at the end of the day. And tomorrow, the price of Reliance for me starts from 2100. Let's say it comes down to 2070. So then what happens? The 30 rupee loss will get debited to my account at the end of the day. And all the profit or losses here is cash settled. So the profit is credited or the loss is debited. We don't here exchange or deliver the underlying asset like Reliance, what we have here. And in commodity market, there was a time when crude oil prices went negative, $36 and all. That is because there we even have an option to deliver the underlying asset. And when storage was a very big problem, for the first ever time, you could even see crude oil prices going negative, not zero, to minus $37 and all. But that's a different ball game altogether. And I want to tell you guys, if you know leverage, if you understand this margin, and I gave you currency market, I gave you the spot market like Reliance example, all this, and assets which are more volatile, they will have higher margin. Assets which are less volatile, currency has lesser volatility. That's the reason why margins are much lesser in case of currency market. Now, getting back after this, let us just go back and see here. I've even shown you live terminal with which I explained all this lot size, expiry, margin, leverage, mark to market, all that. Now, as I told you, if you are bullish, buy future. If you are bearish, sell future. And this is the difference between equity and future market. In equity market, we own the underlying asset. In future market, we never own the underlying asset. So any corporate announcement like bonus, dividend, blah, blah, you won't get it in futures market, because there we are only betting on the stock price movement of the underlying asset. Equity gives you ownership. Futures never gives you ownership. Equity has no leverage because you have to pay full 100%. Futures give you that leverage. Equity has no expiry date. You can hold the stock forever, give it to your son, grandson, daughter, granddaughter, and you can hold it forever. Futures, you can't do it. And only when you have high conviction on your trade, then only go to futures, because you have leverage there, or else better to be in equity. And one greatest point of advantage you have in derivative is, I can even do shorting in futures market, which is not allowed in equity except for intraday. What do you mean by this? I'll give you a fantastic example. Reliance share price, in fact, in last 1 month had gone up by 11%. Everyone had bought Reliance and stock was up 11% before the AGM. And yesterday you had the 44th AGM. All news announced there were superb. But then the stock tanked 3% yesterday. Today 2%, 5%. Reliance is down in last 2 days. Everyone are asking, super AGM, everything is great. Why is Reliance coming down? This is where understanding trading is very, very important. And when everyone have already bought out till the neck, there is simple profit booking which started, because who else will buy the stock from that level for short term to take the stock price up? And if you had shorted Reliance 2 days back and held it, you would have made a return of not 5% because of margin and leverage effect. Even if I assume 5 times leverage, you would have made a profit of 25% in last 2 days in Reliance. And those who bought Reliance future 2 days back, expecting some positive things to happen on stock price based on the 44th AGM, they would have lost by now 25% of their capital. And let me tell you a great mathematical formula which no mathematics can explain. A fall of 50% in a stock price cannot be made good by a rise of 50%. I repeat, a fall of 50% in a stock price cannot be made good by a rise of 50% in a stock price. It can be made good by a rise of only 100%. I'll give you an example. If you buy a stock at 100, it falls to 50 rupees. From 50 to come back to the break-even price of 100, from 50 to go back to 100, it has to go up by 100% and not 50%. And let me now tell you, if you lose 95% of your capital, you have to gain 1,800% to come to break even. So the rule is very simple, and the great golden nugget I'm giving you, just safeguard your losses and ensure you won't lose big. The upside, the profit, it will take care of itself automatically. I always say, take care of your losses, because profit will take care of itself automatically. So these are all few very, very practical aspects of trading which one has to learn in order to succeed in trading. But you can create big wealth only through investing. That is where the hat of a trader when you wear is different from a hat of an investor when you wear. Now, getting back, let me just move on now to the next beautiful world of options. And all these rules, whatever I have told now in futures, applies even to option. And if I directly start option market without telling you what is derivative, what is leverage, what is expiry, what is this ownership of equity versus future, how currency market works, showing you the practical screen, all this, if I don't do it, going direct to options may not make any use to you guys. Now getting back, in futures you can short and hold till expiry date, whereas in equity you can make money only if the underlying asset goes up. Whereas in futures, many of them say market is overheated, market can see a huge correction, it is a bubble. Fantastic, go to futures market, short the market, and if you are right and if market falls, you will make hell lot of money. You can make money even in a falling market in futures by going short. But if you go wrong and you short and market starts going up, you will lose everything. And I remember Keynes, one of the best known economists who made this statement, he said, market is no doubt irrational, but till your pocket gets emptied, it will remain rational. So never fight the market. I always say for a joke, never fight the market nor your wife. They are always right. So never ever you should fight the market, and trading is a different ball game. And I will give you an example at the last. What happened to the world's most intelligent person? And when he traded, he lost money in market, and why? For that, wait till the end. A beautiful story I will give you. Now getting back, you have understood in detail about how derivatives, futures, leverage, all this works. Now let's go to the beautiful field of option. Now what are options? I will make it very, very simple to you, and I'll explain to you in a simple whiteboard. I'll tell you, an option market is very similar to that of an insurance contract. And when I say it is very similar to that of an insurance contract, you have two parties in an insurance contract. We call the first party as policy holder, and the second party is insurance company. Now, similarly, in options market, we have two parties. We call the policy holder as holder, and I will call the insurance company as writer. So the two parties involved in an option contract are holder and writer. Holder always pays premium, whereas writer always receives premium. Similar to insurance contract, you know, insurance company always receives premium, whereas holder, policy holder always pays premium. So in an options contract, you have two parties, holder, writer. Holder pays premium, writer receives premium. Next, because holder pays premium, holder has right, but holder does not have any obligation. Whereas writer, because he receives premium, he has no right, he has only obligation. I will repeat this for your benefit. Two parties in option contract, very similar to that of an insurance contract, are holder and writer. Holder pays premium, writer receives premium. Holder has only right, he has no obligation because he has paid premium for the same. Writer, he has no right, he has only obligation. Now what is important here is people understand this. Holder has limited losses. His losses are limited to the extent of premium paid, whereas his gains, his profits are unlimited. I repeat, holder has limited loss, unlimited gain, whereas writer has unlimited loss and limited gain. His gain is limited to the extent of premium received. Now all this can be learned practically much better, and I'll show you with live example. But before that, you have to understand a very important terminology called strike price. Now if you know what is strike price, I say option market is over. But before that, just for your benefit, I'm repeating it once again so that we understand things better. An option contract is very similar to that of an insurance contract. Two parties in insurance contract are policy holder and insurance company. Here we have two parties, holder, writer. Holder always pays premium, writer always receives premium, and holder has right, no obligation. Writer has no right and he has only obligation. Holder has limited loss to the extent of premium paid. His gains are unlimited, whereas writer, he has unlimited losses and his gains are limited to the extent of premium received. Now getting back, what is the strike price? Now let me explain what is strike price. Another name for strike price is exercise price, but I'll not use this exercise price and all. I'll tell you first what is strike price. It is same as exercise price. Now to know what is strike price clearly, first I have to explain to you what is spot price. Now what is spot price? I go to market and ask what is 1 kg of tomato, and let us say 1 kg of tomato is 10 rupees. We call this 10 rupees 1 kg of tomato today's price as spot price. So what is spot price? It is the price at which you enter a transaction on today's date. So I take tomato on my right hand and I give money on left hand. So it is the price, spot price is the price at which a transaction gets executed today and I make the payment also today. Simple. Now what is strike price? Strike price is the price what we determine today, but for a transaction to take place on a future date. I'll give you an example. Assume I am a manufacturer of tomato ketchup. For me, I require tomato as a raw material to make tomato ketchup. So I don't want tomato today. I want it after 3 months. Now what I'll do is I'll go and contact a farmer and I'll ask him, I want tomato after 3 months. What is the price at which you will give me tomato after 3 months? And we will be deciding that price today. And let us say we decide strike price of tomato as 15 rupees. Now what is this 15 rupees strike price? I am agreeing to buy tomato not today but after 3 months at 15 rupees price per kg, irrespective of what the price of tomato will be after 3 months. So after 3 months, let the tomato price be 50 rupee per kg or let it be 2 rupees per kg. I am telling I will buy tomato, come what may, whatever is the price after 3 months, I will buy tomato at 15 rupee per kg after 3 months. Now this is called strike price. So what is strike price? Price decided today for a transaction to take place on a future date. What is spot price? Price decided today for a transaction to take place today. Now, option market requires understanding of strike price or exercise price. And to make it so simple to you, strike price is the price determined today, but for a transaction to take place on a future date. Now, let us go furthermore on options and understand what is call option and what is put option. Now, if you are through with this, we will go to practical learning. So first, let me explain the concepts and then go to practical learning. Now, what is call option and what is put option? Call option, very simple. It is right to buy. That's all. What is call option? Right to buy. What is put option? It is right to sell. So call option is right to buy. Put option is right to sell. Now we think there are only two positions, that is buy call or buy put. But let me tell you, there are four positions. Now see this very carefully, very carefully. If you are bullish on underlying asset and if you are bearish on underlying asset, what are the options you have? Now in future market, it is very simple. We learned in futures, if you are bullish, buy future. If you are bearish on underlying asset, sell future. You feel Reliance will go up, then buy future. You feel Reliance will come down, sell future. Over. But now when it comes to option, see what you have. If you are bullish, buy a call. If you are bullish, buy a call. If you are bearish, buy a put. Now, it does not end here. Let me proceed. If you are bullish, buy a call, or you can even sell a put. Similarly, if you are bearish, you can buy a put or you can even sell a call. So this is the versatility of option market. I can buy a call or sell a put. Here I can buy a put or sell a call. Now the question is, are these two same or different? They are different, because when you buy a call, you are holder of a call. When you sell a put, you are writer of a put. Similarly here, when you buy a put, again, you are holder of a put. When you sell a call, you are writer of a call. Now, do understand holder and writer. The reason why I used those names and not buyer seller is because I don't want you to get confused here with buy and sell. And that is the experience what I have to ensure no confusion, and I've used these words. So you can either buy a call or you can sell a put if you are bullish. You can either buy a put or you can sell a call if you are bearish. But what is the difference between buying a call and selling a put? When you buy a call, you are a holder, you pay premium. When you sell a put, you are a writer, you receive premium. That is the big difference what you have. And all this learning, whatever I have just now explained to you, fastly we will just go through, and very fast I'm just asking the organizers how much more time I have for my presentation to complete.
More time.
Yes,
Sir, you can take 15-20 minutes, no problem. 10-15
Yes,
minutes.
so
We are having, I think, 100 queries. Around 100 queries we are already having.
Sure.
You can.
All questions till you have time, I'm ready to answer, sir.
Yes, sir. Yes, sir. Yes, sir.
Okay. So I'll just complete it in next 15 minutes. Is that good enough?
Yes.
Yeah, I'm just finding out how many balls remaining and how many runs to hit. So as an intelligent batsman, I want to pace my innings well. Okay, so getting back now very fast. As I told you, what is an option contract, holder, writer, all that. Holder has right, no obligation. Writer has no right, only obligation. Holder pays premium, writer receives premium. Holder has limited loss, writer has limited profit. And what is strike price? Call means right to buy, put means right to sell. And now look at this participants in option market. We have actually 4 participants in option market. We have holder of call, nothing but buyer of call. We have holder of put, nothing but buyer of put. We have writer of call, that is seller of call. And we have writer of put, seller of put. Now, if you are bullish, buy call or sell put. If you are bearish, buy put or sell call. I even added futures for it. If you are bullish, buy futures or buy call or sell put. If you are bearish, sell future, buy put, sell call. Now, let me go towards the beautiful area of derivative trading. And should I be an option buyer or should I be an option seller? And let me discuss those points. As I told you, if you are bullish, 3 things are possible: buy future, buy call or sell put. If you are bearish, sell future, buy put, sell call. Now, should I be an option buyer or should I be an option seller? Is a question. Should I be holder? Should I be writer? Many people think because holder has limited loss, unlimited profit, always better to be an option buyer or always better to be a holder. No, wrong. To decide whether should you be an buyer or seller depends on the following point. Number one, see whether markets are trending or is it going sideways. If you feel markets are trending, that is, it is either going up or coming down, then be a holder. If you feel markets are sideways, then be a writer or a seller. I'll make it very simple to you, and I want you to understand this with an example. Now, let me just show to you the live screen of nseindia.com website and show you how these things will work. So let me just share my site and NSE India website. So just give me a second. So I'm just logging into nseindia.com, and you will be wondering, is it so easy is options? And I'm showing it live to you. Now you can understand because the concepts are so clear to you, and I will show you how this works. So let me just share my NSE screen live, and here we go. So in fact, if you want to be a good presenter today in this COVID world, you have to be tech savvy. You are forced to do that because computer has to even agree with you. Okay, so let me just share. Yeah. So are you able to see my NSE site? If someone can confirm me. Yes. Thank you. Now see this carefully. On the left hand side, you see call, and on the right hand side, you see put. Okay. Now, currently Nifty is at 15,863. For learning sake, this is live today price at 330. This is 25th of June, 330, 15,863. But approximately for learning sake, I will say 15,900. That is the price of Nifty now. Now you have calls on the left hand side and you have puts on the right hand side. Now current price Nifty 15,900. Now see this carefully. Now all that strike price, see all the learning, I'm just putting it to you right now practically. This is call and this is put, and you have strike price here. Currently Nifty is 15,900. Now all that strike price for call above 15,900. See all this above 15,900 we call in the money call, and okay, all that which is below 15,900 is in the money call. Exactly 15,900 is at the money call, and all that above 15,900 is out of the money call. Similarly for put, we have in the money put and out of the money put. Here we don't have at the money because currently Nifty is at around 15,860 something. We don't have a strike price at that level. So what I want to tell you is very simple. See the color there. All this dark yellow color, what you see here is in the money call. Why it is called in the money call? Because the strike price there is below the current spot price, which is 15,900. And all the strike price above that is what we call as out of the money call. Exact reverse is what we see here as out of the money put and in the money put. To make it simple, the dark yellow color is in the money call and white color here is out of the money call. For put it is reverse. Again here the dark yellow color, which is below the price of 15,900, below becomes out of the money and above becomes in the money. Now forget all this for me, that is not important. Now getting back practical, see this carefully. Right now Nifty is 15,900. Okay, I feel market will go up, but it will not go above 16,500. Okay, I feel market will go up. Right now it is 15,900. I feel it will go up, but it will not go above 16,500 before expiry date. And you know expiry date, I'm taking monthly contract, which is the last Thursday of July. So market will not cross this 16,500 before expiry date. Now what I can do is I will go and sell call. Now by selling call, if market goes up from 15,900 to even 16,400, let it go. But if it does not go above 16,500, all the premium what I have taken as a writer of call is mine. So what does a writer do? I want you to understand. Very simple. A call writer says, market let it go up, but it will not go above a particular price. For example, if I sell a 16,500 call, what do you mean by that? I am saying market before the expiry date will not go above 16,500. That's the strike price. So now as a seller of call, you are telling market will not go above a particular point. And if market does not go above that particular point, entire premium will be pocketed by me, and it has to be within that strike price before the expiry date. Let us say after expiry date, let's say in the month of August or September, it crosses 16,500, no problem. So as a call seller, you are telling market will not go above a particular price. But if you are bullish on market, you feel market will skyrocket and it will go up, then simply go and buy a call. But if you are sideways, or if you feel market will not go above a particular price, then you go and sell a call. Now, similarly, if you feel market will come down, go and buy a put. And if market comes down, you buy a put, you make money. But if you feel market will be sideways and it will not come below a particular point, let us say go and sell 15,000 strike price put. What do you mean by selling a 15,000 strike price put? If market does not come below 15,000, I will make money. Now today, I'm teaching you a strategy in options called as strangle. Looks very difficult, nothing. It is a first standards job of learning strangle, and I'll just explain to you what is strangle. In strangle, what we do is, we sell an out of the money call and we sell an out of the money put. For example, right now market is 15,900. So what I'll do is, I will go and sell a 17,000 call. So I'll just put that to you on screen so that you understand it so easily. Now, currently market is at 15,900 Nifty. So what I do is, I sell a call of 17,000 and I sell a put of, let us say, 15,000. Now, what do you mean by this? I am saying by expiry date, that is the last Thursday of July month, Nifty will not go above 17,000 and Nifty will not come below 15,000. So if Nifty remains in this range of 15,000 to 17,000, all the premium what I get here is mine. So let us see what is the premium you get if you sell this, and I am showing to you that on screen. So if you see on the screen, and I'm taking the monthly expiry for July month. Now see the screen, currently Nifty is 15,863. And if I sell a 17,000 call, so see the screen, 17,000 calls and puts, if you just go for monthly expiry, I think because right now the trade process is happening in exchange, the prices are all put as nil here. But let us say I'm getting a premium example of 10 rupees each. So what I'll do is, going back to my example here, I will collect 10 rupees premium here. I will collect 10 rupees premium here. So this entire 20 rupees premium will be mine if Nifty remains within that range of 15,000 to 17,000. This is what we call as selling strangle. And you can make a return of 2 to 3% by simply selling strangle every month. But the problem is, if you are caught in a black swan event, what is this black swan event? If there is a huge movement in market, might be because of, let us say, election results coming out, those months you have to be careful because market can move in a huge way. Let us say there is a Fed meet, an important interest rate hike, or let us say there is a talk going on that interest rate, and let us say there is an US presidential election result coming out. Those months, generally market moves in a big way. Those months you have to avoid doing strangle. or else just sell out of the money call and sell out of the money put. You can pocket the premium. But let me tell you, I can talk hundreds of option strategy, and in fact, it is like playing the game of music. Music has only 7 strings. Sa, ri, ga, ma, pa, da, ni, sa, 8. With these 8 strings, you can play different combinations and create beautiful songs. Whether it is English song, Hindi song, Kannada song, Bengali song, Tamil song, Telugu song, any Urdu song, what happens is still this is the same sa, ri, ga, ma, pa, da, ni, sa. Similarly, in option market, with my experience of 17 years, I say, if you know expiry date, if you know strike price, if you know call, if you know put, with these, you can create n number of strategies. And finally, I will talk to you what is hedging, with which I will complete my presentation in next 5 minutes and take the Q&A. What is hedging? I cannot give you better than this example, which is completely practical. Assume I am a gold jeweler. I have a jewelry shop. Now what happens is, I bought gold today at, let us say, 4,700 rupee per gram. I bought 100 kgs of gold to my shop, and the gold price is today 4,700 per gram. I converted everything into jewelry. It took 1 month time for me to make jewelry, and I'm selling the gold jewelry. After 1 month, let us say gold prices came to 4,500 rupees per gram. Now I bought gold at 4,700, but the moment I had all the jewelry done and I was selling the jewelry, gold prices have come down to 4,500 per gram. Now I'm feeling bad because I'm losing 200 rupee per gram, and I cannot tell my customer, I bought gold at 4,700. Now gold prices have come down to 4,500. You please pay me 4,700 or else I will lose money. The customer will go to next shop. So what should I do as a gold jeweler? Very simple. I go to commodity market and I will short 100 kgs of gold future. Now when I short 100 kg of gold future at 4,700, if gold prices falls to 4,500, I make my 200 rupee profit in the short position of gold future, and I sell my gold at the same 4,500 prevailing market price, and the loss of 200 rupee in my gold jewelry business is made good by profit of 200 rupee which I made by shorting gold in the futures market. This is what we mean by a simple hedge. Now, let's assume other way around, gold from 4,700 where I bought, it went up to 5,000 rupee per gram after 1 month. Now, let us say after 1 month, I'm so happy because even though I bought gold at 4,700 and when I made all that jewelry, the next market rate when I was selling was 5,000. Then what happens? I made a 300 rupee profit in my gold jewelry, but I would have shorted for my hedge gold futures at 4,700, and if gold goes to 5,000, the short of gold future is giving me a 300 rupee loss. But end of the day, I've taken a hedge. So what happens is, what I lose in gold futures I make in my business, and what I make in my business is what I lose there, and both will nullify, and I'm sure of making my business profit. I do my gold business to make my business profit. Let's say I have a 10% profit margin on my business. I'm sure to make that money irrespective of whether the gold price goes up or comes down. But let me give you a very big practical learning. If you can understand this, hedging is not to be done always. And I'll tell you, hedging comes at the cost of future profitable opportunity. I'll repeat again. Hedging comes at the cost of future profitable opportunity. What do you mean by this? If gold prices goes up and if you have not done hedging, you will make not only your 10% business profit, you will also make money because of gold prices going up. But then many people say, as a businessman, My job is not to make money because of up and down movement in gold price. My job is to make my business profit. So always it is better to do complete hedging and 100% hedging. But however, few people who are sure that gold prices might go up, they might only do a partial hedge or no hedge so that they make more profit by not doing hedging. But I want you to understand, hedging does not come only because of transaction cost. That is the cost which you have to incur when you do hedging. But hedging also comes at a cost of future profitable opportunity, because by hedging, if gold prices goes up, you lose the profitable opportunity of increase in gold price. The same rule applies even in currency market. I'll give you a very simple example. Assume TCS has made some exports of software and it has to receive dollar. And let us say TCS has to receive $1 lakh, not today, but after 3 months. TCS has a small profit margin of only 5% in its business, and there is cutthroat competition from everyone. Let it be Infosys, HCL Technology, or even Accenture, Microsoft, or different people across the globe. Now, TCS has only 5% business profit or profit margin, and it has a $1 lakh receivable. Now, what will TCS do is very simple. Today, dollar price is, let us say, $1 is 75 rupees, example. And after 3 months, TCS does not know what will be the dollar price. And by chance, if dollar price comes down from $1.75 to $1.73, rupee appreciates and dollar depreciates from 75 to 73, TCS after 3 months, when it receives its $1 lakh, it can only convert at 73 and not at 75. It will lose money. So what will TCS do is very simple. Because it has a receivable of $1 lakh, it will go and short dollar future for 3 months. And what happens is, if dollar price comes down, it will make money in dollar future and lose money in the transaction. However, if dollar prices in fact goes up, it will make money in the transaction and lose money in the hedge or in the dollar future short. But irrespective of dollar price movement, TCS is sure to make the profit of the business profit of 5%. This is how currency hedging happens. And in fact, now imagine TCS has receivable exposure of dollar and also payable exposure of dollar. Then you can do netting and only the balance can be hedged. Imagine TCS has 3 months receivable and 1 month payable. Then timing is different. You have to take care of that when you do hedging. Imagine TCS has dollar receivable and pound payable. It has done some import and it has to make payment in pound. Now you have to study the correlation between dollar and pound and then do the hedging by doing netting, by doing the difference in timing, what you have between your receivable and payable exposure. And all this can be done if you understand the concepts and logic of how hedging works. So, but I want to make this very strong statement. Hedging comes at the cost of future profitable opportunity. Taking this last 1 minute to give this story with which I will end my session. And this is the story of one of the most intelligent person of this world. And this person is the most intelligent person ever found till date. And any guesses who is the person? And I'm just putting that on the slide. So let me just share my screen fast. And here we go. Intelligent person versus wealthy person. Okay, so we are there. Yeah. So Sir Isaac Newton, he is the most intelligent person ever born in the history of mankind. And this person, Isaac Newton, the most intelligent person ever born in the history of mankind, in 1720, Sir Isaac Newton, he trades in a stock called South Sea Company, and this was a favorite stock in England. And this is 17th century I'm talking. When I was not born, you were not born. And Sir Isaac Newton, he senses that the market will be getting out of hand and he will be buying the South Sea Company share, and he sells all the shares, and within just a few months, he will make 100% profit on his capital, and he pockets a profit of 7,000 pounds. Let me tell you, 7,000 pounds in the year 1720 was a very big money. You could have bought the entire city if you wanted in terms of real estate price, and he pocketed 7,000 pound profit in the year 1720, and the most intelligent person ever found in this world was so happy. But then later what happened was, just few months later, swept in the wild enthusiasm of market, he jumped back and bought again South Sea Company share at a higher price, and he lost 20,000 pound in all. For the rest of his life, he forbade anyone to even speak the word South Sea in his presence. He made 7,000 pound, but later lost 20,000 pound altogether. And Sir Isaac Newton never allowed anyone even to utter the word South Sea in his presence. And he made this beautiful statement. He told, I could calculate the motions of heavenly body, but not the madness of people in stock market. Isaac Newton could calculate the motions of heavenly body. What is that Jupiter is doing? What is that Uranus is doing? Mercury is doing? He could do all that. He could find the distance between all that. But he says, I can never ever understand the madness of people in stock market. And he says, this statement was told by Isaac Newton, and then Benjamin Graham, he is guru of Warren Buffett. Benjamin Graham was guru of Warren Buffett. He was given a task to find out why Isaac Newton lost money in market even though he was so intelligent. And finally, Benjamin Graham told, by letting the crowd override his own judgment, the world's most intelligent person acted like a fool. And finally, I give my verdict. I cannot call him fool and all, but surely Benjamin Graham can call Isaac Newton a fool. But in my statement, Sir Isaac Newton was an intelligent person, but he was far away from an intelligent investor or a trader. By letting his emotional imbalance overrule his own intelligence, he failed miserably in stock market. Let me tell you, it is just not enough if you have IQ. You have to have EQ also, that is control over your emotional quotient of life. And if you cannot control the emotional part of market, however intelligent you are, making money becomes tough. And Sir Isaac Newton is the live example of someone who could not control his emotional balance. He made losses in market. And finally, I always say the illiterates of 21st century are not the ones who cannot read and write, but those who cannot learn, unlearn, and relearn. Thank you so much for giving me this wonderful opportunity to share my small knowledge, experience, and expertise of derivative market. Deep from my heart, I bow my head with folded hands. Thank each one of you for giving me this wonderful opportunity, and proud to be a chartered accountant, and even more prouder to address this August gathering. Thank you so much, and open for Q&A.
Thank you, Rudraji. Thank you very much. Wonderful deliberation. Very, very big round of applause. We are still having more than 5,000 chartered accountants live with all of us. That shows the magnet of our learned resource person, learned guest speaker, our I will say our brand ambassador of the chartered accountants in the capital market. So thank you very much. Over to Rasamit as well.
Sir, at the end, I will give my current market view. So if people stay till the end, till the meeting is ended and all validatory, all function is over, then they will get the best stock to buy also. So for that, they have to stay till the end. This is a technique to make people stay till the end. Okay, thank you.
And let me tell you, Rudra sir, about 98%, 97% members do stay up to the last moment. I don't know why. And when you are there, 100% members will stay. I was just asking Amit Agrawalji that what is the present state of affairs. So practically everyone who is registered is live with us as of now.
I'm so happy and privileged, sir. Sir, start shooting questions to me. I will answer them, and we can start.
Yeah, and I think before that, may I request our past chairman of Dehradun branch, CA Vimal Kisorji, to ask the queries. Vimal Kisorji.
Yeah, thank you, Anuj sir. And thank you, Rudramurthy ji. It has really been one of the most informative sessions, and the way you have explained everything, I think these heavy words, these terminologies which are unique to trading in stock market, which we are always finding very difficult to understand and swallow, they are now becoming, we are developing a, I will say, a palette for that.
Thank you.
So the questions, the first question that I have got is how to hedge for reducing risk. I believe your session on hedging, the last 5 minutes that you devoted on hedging, has already answered the query. But still, if you would like to say something on this.
Yes, definitely. Yes. One important point I want to tell is when people are in business, your job is to ensure you make your business profit and not profit through the movement in underlying asset. Unless you have a trading prop desk or something where your whole business is only derivative trading. So example, like I gave you a TCS example or a gold jeweler example. These guys have to go for full hedge always so that they're sure to make their business profit. But however, people should understand by taking hedge, you have a cost of missing a future profitable opportunity. And as a trader, if you are sure on the underlying asset price movement, and if it is in your favor, then yes, you might take a partial hedge or no hedge. But I advocate always to have a hedge. But however, let us understand, hedge will reduce our exposure, our risk, and also our return. And you have to take calculated risk, but not foolish risk. I do advocate a partial hedge or a complete hedge, depending upon the scenario. Hope I've answered the question.
Yes, sir.
Thank you. Next.
Second question is when to use straddle and when to use strangle strategy.
Excellent question. See, what is straddle is, if market is now at 15,900, what I do is, at the current strike price of 15,900 only, I will sell both call as well as put. Or to make it simple, we sell at the money call and at the money put. Whereas in strangle, we sell out of the money call and out of the money put. But let me tell you, as an option seller, strangle is less risky than straddle. So if you expect market can go up or come down in a huge way, and you are a less risk taker and you want more protection, then go for selling a strangle. But if you are sure market will not make a big move on either side, then only go and sell a straddle. To make it simple, strangle is less risky, straddle is more risky. It all depends on what is your expectation of the range in which market can move before the expiry date. Hope I've answered. Thank you. Next question.
Next question is, what is the simple strategy for a day trader?
I will say the simplest strategy for a day trader is don't do day trading unless you have the last level of expertise in trading. I'm telling you this because day trading is like playing a helicopter shot or a reverse sweep. That you have to do it only with lot of experience. And people always, as a beginner, I suggest you not to start with day trading. And some people, they say, sir, I am retired. I want to do some work. So let me do trading, and that too day trading. Just because you have time, that does not mean you have to lose money. And I'm not against day trading. I'm only telling as a beginner, don't start with day trading. When I'm starting to play cricket, I should not start with a helicopter shot or a reverse sweep or hitting above the wicket keeper. You have to first play the strike drive, cover drive and learn the game and then go for day trading. But if you ask me what's the simplest strategy in day trading, on expiry day, if you are able to see whether market is trending or sideways, and if you do the same selling of strangle or straddle with proper hedge, you have strategy like iron butterfly, you have strategy like I can name 500 strategy, and I'm telling you can create a strategy of your own, because if you know the sari gama pada nisa of option, you can create the song like A.R. Rahman. But then I'll tell you, as a day trader, on expiry day, especially if you want to make money, sell strangles and ensure that day market will not trend, and come to day trading only at the last part of the expertise. The trader should go there, not as a beginner. Next question.
Very well explained, sir. I think I am not having any further question. Anuj sir, any questions?
Yeah, I will request Himanshu Sharma ji. Thank you, Vimal Kishore ji. May I request Himanshu Sharma ji, past treasurer, Dehradun branch, to ask the queries. Himanshu ji.
Yeah, please, sir. I have some query. First, I just would like to thank you, Rudra sir, to give us such an immense idea about the option and future.
Thank you.
And now we have some option and future. I am waiting that you are providing some tips for the investment. So I think it is better to the next time.
Sir, you have to stay till the end. Then only I'll give you.
Okay. Then we have to sit till the end.
Yes, thank you.
What are the risks involved in the option trading?
Very simple. I will always say, especially when you are an option buyer, people think the risk is only limited to the premium paid. But let me tell you, if someone has 1 lakh capital, if he has bought 100 rupee worth premium and he has bought a quantity of, let us say, for his capital of 1 lakh, if 100 is the premium price, I'm just telling he has bought 1000 quantity. If that 100 goes to 0, he does not lose 100 rupee. He will lose his entire capital. So the risk is you can lose 100% of your capital. But then that is where risk management, having stop loss, making decent position sizing is very, very important. I'll just give you the best example right now to make people understand position sizing, which is very important to me. Now, if I have a coin in my hand and we play a tossing the coin game, head or tail, I will ensure I will win the game. But only thing is, the rule is whether it is head or tail does not matter. You can call it, but I will decide the stake. And I'm just taking this as an example and asking my person here to give me a coin. I'm just taking 1 minute so that it adds value to our people. And why people lose money in market is not because of market of derivatives, all that. They're actually not traders, they're gamblers. And people who are gamblers will never make money. The casino makes money, the house makes money. I'm just taking this 1 minute time to make it more practical. Himanshu is there with me and I and you are playing this tossing the coin game. You call whether head or tail. The only condition is I will tell when to stop the game and I will decide the bet amount. These are the only two conditions. I will decide the bet amount and I will tell when to stop. The rest is all yours. We are just playing this game. So now the bet amount is 1 lakh. And Himanshu can just tell whether head or tail and I'll toss the coin. This is a fair coin, not taken from Sholay movie. You have both tail as well as head. Yes, Himanshu, go ahead, head or tail. Very fast. Himanshu, head or tail?
Head.
Okay, Himanshu says head. I tossed the coin, superb head. You have won 1 lakh, Himanshu. We have to give a round of applause to Himanshu. Okay, now the game continues. Come on, go ahead. Now the bet amount is, let us say 5 lakh. Okay, just go ahead, head or tail. Yes, Himanshu, fast. Himanshu, go ahead. Huh?
Again, I would like to go with head.
Super. So it is head again. Head again. So 5 lakh you have now won. First 1 lakh, now 5 lakh. You have won 6 lakh. Rudra has lost 6 lakh. I'll pay the amount to you. Do not worry. And if you lose, you have to pay to me also.
Like to stop.
Yeah.
No, I would like to stop.
No, that you cannot do. So 6 lakh you have won now. Now we are tossing the coin again. Now the bet amount is simple, 20 lakhs. Yes, head or tail, please call.
Again, I would like to go for head.
So you are saying head. Again, it is a head. You have won 20 lakh in this bet. Previously 6 lakh, 26 lakhs you have won. Superb. So we are now going for the next game. 50 lakh is the bet amount. Yes, sir, head or tail, go ahead.
I would like to run away.
No, you can't. That is the rule. Please go ahead, head or tail.
Head.
Now again head. 50 lakh plus 26 lakh, 86 lakh. Very good, fantastic. Now the bet amount is 2 crore. Head or tail?
Again, sir, head.
Head. Now the tail comes.
Yes.
So out of 5 bets, you won 4 bet. I won only 1.
Yes.
But the last bet amount I had kept was, let us say 2 crore. You had won 86 lakh.
Okay.
Now you have to pay me 1 crore 14 lakhs. Now we will stop the game.
Okay.
So the point here is why people lose money in trading is they have their 1 lakh, they make it 2 lakh. They have 2 lakh, they make it 20 lakh. They have 20 lakh, they make it 2 crore. They have 2 crore, they want to make it 20 crore. And when you keep doing this, you're wrong once, you will be back to zero. In your lifetime, you cannot eat the whole money of market. But market can eat even Warren Buffett, Rakesh Jhunjhunwala and Rudra Murthy in seconds. So the big learning is you should know your position sizing. You should not keep betting everything, because you can't be right every time. If you keep winning this head or tail, I keep continuing this till I win and I keep increasing my bet amount. But the point here is, do we have unlimited money to keep betting higher in reality? Answer no. So never fight the market nor your wife. They're always right. Thank you. Next question.
The next question is, I think this is important for us also. For arriving at turnover, differences arising on settlement of transaction, ignoring plus and minus signs are added. What is the reason for adding premium on sale of option also to arrive at turnover?
Super question. I will only give one line answer. Please do not ask any questions regarding taxation to Rudramurthy, because I worry only on making money and making profit. We have a lot of good chartered accountants who practice, who will help you for reducing tax. I believe in only one concept in life. I don't mind paying 10 crore tax per annum if I earn 100 crore per annum. How many of you here are happy to pay 10 crore if you earn 100 crore? Do the voting, you get the answer. So again, I don't understand taxation because I don't practice. So I will just tell, go to this question, but refer to something. If you want set off, carry forward, calculation of turnover, all this, I think section 71, section 72, and whether it is speculative, non-speculative, all that is there in income tax. Okay. Yes, next question.
Now the last I have is how to identify whether market is sideways or trending.
Excellent. That is where technical analysis will come into picture, and you have to understand support, resistance, market profile, order flow, lot of things. But then let me tell you the probability, 70 to 80% of the times markets are generally sideways, and only 20 to 30% of the times they trend. That is the reason why option sellers always have an advantage over option buyers, because every time you keep telling like market will be sideways, still you will be right 7 out of 10 times. But then the 3 out of 10 times you are wrong, ensure you lose lesser money than what you would have made in that 7 out of 10 times, because you can't be right 10 out of 10 times. And George Soros, one of the greatest traders of this world ever found, he says this: it is not important in market whether you are right or wrong. What is important is, when you are right, how much more money you made, and when you are wrong, how much less money you lost. That matters. I don't know if I have made sense with that statement.
Thank you, sir.
Next question. Next question.
Yeah. Thank you, Himanshu ji. Thank you, Vimal Kishore ji. We are having a lot number of queries. Dr. Amit Agrawal ji, you want to say something?
I'm jealous.
We are having one query.
Himanshu ji, that he has earned a lot of money, and I was
but lost also.
Video. So I'm jealous with Himanshu ji. So Chairman sir, I think there are a lot of queries. So you would take the queries or?
Yeah. So Prasad Balakrishnan sir from Kochi, what is strike price? Does this indicate entry level?
Strike price is actually telling the price at which you are betting as of today. So for example, if I say strike price and I am selling a call option of 16,500, it means I am telling today that market will not go above 16,500 if I sell call option of that strike price. So strike price is not the price at which you are betting. You are saying market, for example, Nifty will not go above 16,500 by selling call. Now, if you get a premium of 10 rupees for the same, if market does not go above 16,500, the entire 10 rupees is your money as a writer. Writer makes limited profit. This profit is limited only to the extent of premium received. So that is what we mean by strike price.
Yeah. Then, from Indore, Ravi Kumar Ramnani ji is asking whether a CA in full-time practice can provide equity advisory services to his clients without having any license from SEBI. Please also confirm whether a full-time practicing CA can do intraday trading or not. Institute of Chartered Accountants of India as such is allowing each and every chartered accountant to be in the capital market. But if we want to remain in full-time practice, then the trading, whether it is intraday or otherwise, is not allowed to a chartered accountant who is in full-time practice. But if I am having the management consultancy LLP or private limited company, lot number of activities have been allowed to the practicing chartered accountants. They can be whole-time director. Harshit ji already the director of a management consultancy private limited company, and he can very well have 10 crore rupees as salary as a whole-time director from this management consultancy private limited company. So institute is trying its level best to see that even the practicing chartered accountant can play a very, very active role in the management consultancy as well as in the capital market. Rudra ji, you want to say something?
Yeah, definitely. I'll add a point. As I told before, and as Anuj has already given me, has already answered, this is something to do with your professional code of conduct, blah, blah, blah. But that's the reason from day one of my CA, I have not practiced, nor I have worked as an employee as a chartered accountant. And okay, but what about those who are already practicing? That's the reason I told. It is good we have a rule like this, because I don't want people to do day trading morning till evening. If you are sitting on screen, how can we focus on our practice? But then I'll tell you, big wealth is created only through investing. In fact, all my money, what I made was in one stock called Shilpa Medicare. And I was buying this stock from 50 rupees. Within 3-4 years, I sold it for something like 700 rupee. And I wanted to name my commercial complex, which I built out of that money what I made, as Shilpa Medicare. Then people will think Shilpa is some girlfriend name. But I'll tell you, all my money was made only from that one stock. It was not made through derivative. Derivative gives me profit. That profit I have to invest and build long-term wealth. You can never multiply and keep putting all your money in trading. And we saw the example of tossing a coin. So what I want to tell people is, do trading to create capital and invest those profits in good companies which will create long-term wealth. Rakesh Jhunjhunwala is made only because of 3 stocks: Titan, CRISIL, Lupin. You remove these 3 stocks from Rakesh Jhunjhunwala portfolio, he will not be Rakesh Jhunjhunwala. But we people want 3 stocks like Titan, CRISIL, Lupin every day when he has got it in his lifetime. It is enough if you get 1 Titan in your lifetime. We don't want it daily.
Yeah, thank you very much. So nice of you.
Next.
Then we are having from Bangkok, Thailand. Lot of capital is required there. Hitesh Dharodji is asking, dear Anuji, thanks for recognition of overseas members. These webcasts on options trading is really very helpful. Thanks for the entire team making this happen. Okay, thank you. He's not having any query, but he's appreciating the deliberation of Rudraji. Then from Singapore, C. Ashok Singalji from Singapore, please speak on taxation of options trading. Which stage, time of taxability, and if options sold purchase trading period spans more than 1 financial year, is opponent done based on period falling in different financial period. We will have separate session on this very, very important aspect on the taxation. And I think C. Amit Agarwalji, Dr. Amit Agarwalji will take care. Rudraji, you want to comment on that?
Yeah, as you said, see, I come from the field of derivative trading, investing. You ask me anything on investing, trading, stock market, derivatives, I can answer. Taxation part, even though I'm a qualified chartered accountant, that's not my practice area. I don't do that. So it would be better if someone can handle the taxation part of this entire subject. I can talk, but I don't have the expertise. I don't want to touch on topic where I don't have the expertise.
Chairman
Dr. Amit want to say something?
Yeah, Chairman sir, today itself we have decided one national conference wherein Dr. Grees Ahuja ji would be deliberating on taxation aspect in capital market. So we will be sharing that link to the audience and they can join that session.
And it is on 5th of July and from 11 to 2 p.m. first day. And Dr. Grees Ahuja ji will be the second speaker. First speaker will be Rudra ji. And the next speaker will be Dr. Grees.
Sir, what is this, sir? You guys are so fast.
As Rudra ji is the Dr. Grees Ahuja of capital market. And it is the conference of the capital market. So Rudraji will be.
Sir, Anup sir, this team is so
open.
fast. Someone asks a question, you say it is already there. This is the date, this is the time, and you can do. And let me tell you, when I was a student doing my CA, I used to read the book of Girish Ahuja sir. And what more I can ask just to be a co-speaker with such a eminent person. I used to read Singhania, I used to read Manoharan sir's book and Girish Ahuja book for taxation.
Yes,
they are the creators and leaders and the pitamahas of that particular subject. And if I'm sharing dayas with them, for me, that is the biggest moment. Thank you so much. And the team makes it like this to happen. Good. Thank you.
Yes,
next.
Thank you. They have to hand over the batons also, no, sir?
Yeah.
To the next generation.
Yes.
Thank you. Then CA Pradeep Kumar Janji from Indore. Can a practicing CA do option trading as he is not entitled to do day trading in stock market? See, we have already decided that we can have our own investment. We are not allowed to do the business. If I am a full-time practicing chartered accountant, however, a practicing chartered accountant who is a partner or a proprietor can very well do anything in the capital market if he don't want to remain as a full-timer. He can very well be in practice. He can do the attest function. He can't sign the audit report. He can very well be in practice. He can do the consultancy and he can do each and everything in the capital market. But if Harshit ji and Naveen ji and Rajesh ji are practicing chartered accountant and they want to invest 100 crore rupees, they are earning say 50 crore rupees out of the derivative income, out of the derivative from their own investment, Rajat ji, then it is chartered accountant now. This year only we have taken this decision. But if it should be your own investment, it should not be business. It should not be trading. It should not be trading for others. So that is my humble submission. So then a lot number of questions are there.
Taking questions, you can avoid these questions on taxation. And let me make a full humble disclosure to everyone. I'm not an expert on taxation. I can only talk to you on my subject of derivatives, stock market, trading, investing. Anything here? Yes, I can.
Yes, right. Then we are having one query of C. Ankit Janji from Dehradun itself. Please explain a hedging technique to do option selling with low capital. I understand we need to sell one ITM call option and buy one deep OTM.
I will answer. I got the question. Now, normally what happens when you sell options, for example, you are selling a strangle. As I told you, sell an out of the money call, sell an out of the money put. The margin what you have to pay to exchange will be very high, because when you sell option both the side, your risk is unlimited. So exchange will collect higher margin from you. For example, I'm telling, if you want to sell an out of the money call and put, close to 1.5 lakh you have to pay just for one lot selling of call and one lot selling of put. So what you can do is, if you want to reduce this margin, you can even buy an out of the money, far out of the money call and far out of the money put. So by buying a far out of the money call and a far out of the money put also, what you are doing is you are making your unlimited loss into limited loss. Thereby your margin reduces. So by having small capital, if you want to do something like, as I told you, if you sell a strangle, you require 1.5 lakh capital. And by buying an out of the money call as well as out of the money put, you are making your margin from 1.5 lakh only to 60-70,000. But then your profits will also reduce, because there is a cost for buying the call and the put. And this will reduce your profit and reduce your margin also. That's what we actually call as iron condor. So when you sell a strangle, for that if you buy an out of the money call and out of the money put, it will make your unlimited losses limited loss. It will reduce your margin, but your profitability also reduces to the extent of hedge what you are taking. Hope I've answered this question.
Yeah, thank you, Rudraji. Yes. Then we are having from C. Ajay Gaudji from Jaipur. When average open interest of Nifty futures deviate 30% on higher end from last 6 months, we can make an assumption that market is directing a big move in next 10 to 15 trading session?
100% yes, but let me add more value to his point, and it's a beautiful question. Normally what happens is, especially in F&O market, if there is an increase in open interest and there is an increase in price, that tells to me the bullishness in underlying asset is very high. In fact, open interest or volume does not make any sense unless you compare it with price. So when price goes up and then open interest goes up, that tells to me that there is a high chance of the underlying asset going more positive or bullish. Similarly, if price falls drastically and then there is huge increase in open interest, that tells to me the chances of stock coming down is very high. Along with this, what we also see is, these are all things not there in textbook. It comes only with experienced traders who are in fact professionals in trading. Along with this, we can even add delivery volume as a percentage of total volume. Now what we do is, we see even out of total volumes traded in the underlying asset equity market. For example, Reliance before result, before AGM, I was looking at the delivery percentage of volume. And whenever delivery volume is increasing out of total volume as a percentage, and we see whether price is going up or coming down. So if price is falling with increase in delivery volume, that is telling me, even as a trader, it is telling me long-term investors are getting out of that underlying asset, and that should be reflected in the derivative product. So always looking at open interest, looking at delivery volume as a percentage of total volume in relation to price movement makes a lot of sense. Hope I answered your question.
Yeah, thank you. Then CA Kamal Taneja ji from Noida. In the future market, how accounting to be done on full value of purchase, sale, or on the difference value of sale purchases?
The taxation, sir, I will exclude. Next.
Yeah, I think we will take the next step. We will answer the query separately. Then from Meerut, Alok Agrawal ji, past chairman, Meerut branch, which is the best software for technical analysis?
I'll give the beautiful answer. It's like asking which is the best bat if I have to play cricket. So answer is very simple. All softwares gives the same data but in a different way. It is our analysis which makes money. In fact, even I had an assumption in my initial days as a trader that software makes me rich as a trader, or it makes me a professional and a profitable trader. But let me tell you the reality, it is my analysis of that chart, whatever the software shows, is what makes me money. And in fact, I remember Warren Buffett telling this, if books were the most precious assets of this world, then librarians would have been the richest people of this world. That does not mean he is against books. He's only telling applied knowledge is more important than what is just written there. And applied knowledge is what we are getting in this session. And let me also tell you, there are some softwares like Metastock, AdvanceGet, Ninja, and Ami Broker. These are all some of the very professional good software. Most of them gives the same chart, whatever you can see, but then it is our analysis, our control of risk, position sizing, and our understanding of short-term moves in market, which makes you a better trader. And we just played the tossing the coin game, and you saw our friend was right 4 times out of 5 times. I was right only 1 time, but still I won at the end.
Thank you, sir. CA Vikas Jainji from Jaipur. Index or stock settle at expiry on future or cash basis. For example, if I have bank Nifty card.
Understand, answer is it is always cash settled. Next.
Yeah. You know what would be the whole query. So,
yeah, I got the question and I answered. No, in fact, someone who asked me even that question on margin, how to reduce the margin and all that, you cannot ask those questions unless they are trading in options. They are beautiful questions. It's like a professional person trading in option asking another professional his view, and just based on the questions I can make out how much august audience and intelligent people we have here. It's not easy. In fact, some of them who are there in this program, their experience is greater than my age.
Very true. Thank you. Then Ravi Kumar Ramnani ji from Indore. If someone can bear overall loss up to rupees 5 lakh and same is available in liquidity with him, then he should go for equity market with 5 lakh or should go for future market with 1 lakh and balance keep in hand. Suppose margin is 20%, which is much better way to make money in short term with lower risk.
Fantastic question. I will say, if you are trading in derivative market, you have to be very swift, flexible, fast. It is like a T20 match. Cricket is the same game, whether it is test match or T20 match. But then the art of playing a T20 match is different from the art of playing a test match. So if you are ready to be flexible, if you understand the very short-term movements in market, and if you can control your emotions well, then I would suggest you to go with 1 lakh capital, take the leverage and do it in futures or option, or else equity will be much better. So it all depends on what level of expertise you have in trading and investing. That will give the answer to your question. Thank you.
Thank you. Then CM Mukta Das ji from Noida, who actually pays for your profit? Is it the exchange?
No, wrong one. Let me answer. Derivative is always a zero-sum game. If I am making money, there is someone else on the other side losing. And if that other person is making money, there is someone else on the counterpart who is losing. That's the reason why we say it's a zero-sum game. Exchange does not do anything except collecting margin from both the people, and exchange will remove the counterparty risk. If you go to forward market, there you have the counterparty risk, whereas in futures market, because we have exchange and because both the parties have to pay margin, whether it is futures or whether it is option, because there is exchange in between and margins are there, counterparty risk is completely removed. Exchange job is not to pay the profit or loss. It is not the other side of the party to the derivative contract. It just acts as a middleman between the buyer and seller and ensures there is no counterparty risk.
Then CA Vikas Janji from Jaipur, our account is settled on daily M2M basis. What should be treatment of carry forward option bought on 31st March of April expiry? Amount paid being treated as loss in?
Sir, something to do with taxation, I will avoid again. Next question. He's just asking, let's say 31st March, end of financial year, I carry the position, so will it be treated in this previous year or the next one, blah, blah, blah. I only say ask my chartered accountant, but you have here a lot of people who are much, much smarter than my chartered accountant. So these questions, I think Girish Ahuja sir will answer. So don't miss the program on 5th of July, where you will have on one side person on capital market to talk, and on the other side you will have a person who is the expert on taxation and might be there. Today we have discussed more on derivatives. That there might be something to do with fundamentals, technicals, trading, investing, creating long-term wealth. So some of these topics can be even discussed, and that will give me an opportunity to share some more inputs from whatever I would have learned in my 17 years of journey in market. And also today's program, if there is a recording available, I'm sure many of them can watch this again to understand it slowly, because in the limited time I tried covering so much, and then people who have missed it, if they're friends of yours, or let us say in your office you have a lot of people who don't understand derivative, you can definitely give them this program recording, and that will add value to them. If it has added value to you, it should add value to them.
Chairman, I think it would be very well available on the YouTube channel of ICAI, and Dr. Amit Agrawal ji want to supplement something.
Yes, sir. To the viewers only, that their queries will be addressed, and we at office level will be compiling all the queries, and in advance we will be sharing it to the Girish Ahuja sir, and need we can have a separate query session also for all these queries.
And also I'll share my presentation. I've already done it with Kunal, and you can even please share the entire slides of today's presentation, whatever I've done with people, so that will also help them in terms of material if they want to refer to.
Then CA Subham Sharma ji from Seeker, in option, how to select right strike price option, call or put, because many times due to wrong selection of strike price, option loss occur.
Excellent question. I'll tell you, especially if you are an option buyer, you have to see something called as delta of an option. Now, what is delta? First time when I used to hear all this, I used to think, Abba, option Greeks, very confusing, delta, theta, gamma, vega, rho, and I cannot handle all this. But today it looks like a child's play, and I'll just take 30 seconds to tell you all this. It is easy. What is option delta? It says the change in option premium given change in underlying asset. I'll make it simple. Nifty is, let us say right now, 15,900. And if Nifty goes up by 100 point, if call delta is 0.7, it means if Nifty goes up by 100 point, the underlying asset goes up by 100 point, the premium will not go up by 100 point. It will only go up by 70 point because the delta of the call is 0.7. Now, I don't know how to calculate delta. You have a big formula of Black-Scholes who got a Nobel Prize for this contribution. But then I have a simple free software which will do the delta calculation. What I do is I interpret the delta and I'll decide how to use it. 0.7 delta tells me what? A 100-point increase in underlying asset will have a 70-point increase in call premium. Now, you have to understand, like this, we have few more option Greeks, like as I told you, theta, vega, gamma, rho, all that. But I'll tell you, as an option buyer, you want the delta to be higher so that the movement in underlying asset is more or less reflected in the premium. So always buy an in the money call or at the money call when you are an option buyer. But when you are an option seller, go for deeply out of the money call, which has a very small delta, because even if market goes against you as an option seller, because delta is very small, even a 100-point movement in market on the side against you with a delta of only 0.1, you will only have a 10-point move against you. So very simple. How do you select strike price? Based on delta. But if you don't understand this depth, whatever I've spoken, and I've given it in the small time available, I can only tell you, decide to buy an in the money option or an at the money option as a call buyer or a put buyer, and as an option seller, go for out of the money option, which has smaller delta. Hope I've answered the question.
Yeah, thank you. Then CA Anil Agarwalji from Jabalpur, it is said that derivatives are vesting assets and are not a investment product. So is that mean we should not invest in futures or options and rather do investment on delivery basis?
Super question. For me, this is the best question. And I love questions. Anything to do with derivatives, stock market, all the taxation, big zero. I don't even know how I passed my CA, and especially all the subjects of taxation. From day one, I was ready to pay all the tax of this world, provided I make big money. That's the mindset I have. Now, getting back, options are called as wasting assets. Such a beautiful statement. And the person asks me the question, then in that case, does it mean we should not invest there and do only delivery products? Now, why is it called wasting asset? Because if the market remains at the same place, so let us say today Nifty is 15,900 and Monday, again Nifty closes at the same price of 15,900. Now, what happens is, from today, the expiry date is, let us say, 25 days away. After 3 days, what happens if market is at the same place? The expiry date from that day has reduced by 3 days. So if market remains at the same place where it is after some time, both call option and put option premium starts falling. That is the reason why options are called as wasting assets. But see the beauty here. If you are an option seller, if market does not move up or down and remains at the same place, because it is a wasting asset, premium starts falling down and you start making money. So as an option buyer, you have to catch not only the direction, but you have to also catch the momentum. I repeat this beautiful question. As an option buyer, you have to catch not only the direction, but also you have to catch the momentum, the speed of the movement. That's what we call momentum. The speed in which it is going up or coming down is what we call as momentum. Whereas as an option seller, For you, momentum is not required. Even if you are wrong many a times, you make money because options are wasting asset, and the chance of option buyer making money is only 20-30%, whereas the chance of an option seller making money is 70 to 80%. And since the game is tilted more towards an option seller, if you understand markets better, the chance of you making money as an option seller is very big. But as an option buyer, if you want to make money, you have to understand momentum along with direction. Hope I've answered this beautiful question. Yes, options are wasting assets because both call premium and put premium starts reducing as time decays. This is what we call as theta of an option, which measures the time decay. So as time goes closer to expiry, and if market remains at the same place, both call option and put option will shrink on its premium. Hope I've answered the question.
Yeah, thank you very much. Then from Jaipur, CA Vikas Jain ji, do we get a premium immediately in case of option writing? Is this margin available for trading after closing such short trade?
Fantastic. Normally what happens is that option premium will get blocked in your account. It will not be released immediately. And only once the settlement happens and you are out of the position, then the premium gets released. The exchange does not release it. It will be kept in your account because exchange does not want to lose any money on behalf of you. So because you have unlimited risk of losing money, whatever option premium has got collected, it will be blocked in your account. You cannot withdraw it. Only once the account is settled or your transaction or your trade is exited, then the premium comes to you.
Yeah, thank you. Then from Jaipur, Vikas Jain ji again. Sir, I have a question on PCR. How put call ratio is important to decide stock movement, and which level PCR is benefit for bull and which is benefit for bear?
Very, very good question. Fantastic. See, what is this put call ratio? Normally what we do is we see the number of puts divided by number of calls, and we want to see whether market is tilted more on the put side or more on the call side. And generally what happens in a rising market, this put call ratio goes to 1.5, 1.6, 1.7, 1.8. And when put call ratio goes to that extent of 1.8, what does it mean? For every 1.8 puts, we have on the denominator one call. Now again, people will ask, how can calls and puts be different because buyer sellers are same? What happens here is based on different strike prices, this put call ratio is calculated. To make the practical learning for you easy, whenever put call ratio goes closer to that 1.7, 1.8 and all, we expect markets have gone up too much and there is a chance of correction. On the other side, when put call ratio comes closer to 0.8, 0.7, all that, we expect market is too much oversold and a chance of bounce is expected. This is what we call as a mean reversion trade. And similarly, what we also do is, someone asked also a question on open interest. Very simple. See where open interest is very highly stacked. Wherever you have high open interest, we believe that strike price will act as a crucial support or resistance. Generally, when you have, let us say for example, right now you see the open interest, 15,000 puts have the highest open interest. That means the put seller of 15,000 will always ensure he will hold that level and he will not allow the market to fall easily. And similarly, if you have a 17,000 call strike price having high open interest, it means the 17,000 call seller will ensure market will not go above that level of 17,000. So we always look at the seller's activity because selling is normally done by institutional people or even people with big capital who always buys option. They're generally these gamblers with small capital who want to lose small money and try to make big money. So it is like a lottery what people do. But then in option selling also you will lose money if you don't have proper hedges. And as an option buyer, you can make super money provided you understand momentum very well. So I still have this record. I had, this is not today, I think it was some 7 years back. I had a capital of only 50,000. I made it into 30 lakh rupees with 50,000 capital in a period of 3 months. and this could have been done only through option buying. But then I was ready to lose by 50,000 and make it zero. Today, if you ask me 50,000 to 30 lakh, will you try on today's capital what you have with you? Definitely not, because there I was ready to lose 50,000. But today I can't do the same thing with a capital of, let us say, 50 crore. See the returns what you can make. Size matters a lot. In fact, people talk about inflation. Let me tell you, even if Rakesh Junjunwala earns 3% return on his capital, which is less than inflation, which is less than FD rate and less than treasury bill, 3% on his capital of 1 lakh crore makes a very big amount every year. So what is important is size matters. Making my 1 rupee, 2 rupee is easy. Making my 100 crore, 200 crore is not easy, even though percentage wise it is the same 100%. So as option buyer, you have to catch momentum. As an option seller, you don't have to do anything. Allow for time taker to do its work. And if you can understand markets also a bit well, there is hell lot of opportunity to make money. But both requires different skill sets.
Yeah, thank you. Then from Jaipur, CA Arun Jainji, how to earn 2 to 3% per month from market? Kindly explain with example.
I told you selling strangle. So what you do is very simple. Let us say currently market is 15,900. So what you do is 1,000 points away strike price, sell both call as well as put. So for example, if now market is 15,900, you sell a 17,000 call and you sell a 15,000 put. This is what we call as selling a strangle. Doing so, eat your premium, but be cautious that you will not be doing this in a month where we have a event which can move the market in a big way. Like examples, as I told you, any big international events, like as I told you, Biden versus Trump election, or let us say it is here some election, central government elections, or might be an RBI policy, or might be a Fed meet, or any event which has a huge possibility of making market go up or down. But let me tell you, if you do this consistently every month, you will be right 10 out of 12 month or 11 out of 12 month, you will be right. 1 out of 2 month, you will be wrong. That is where you have to ensure I lose lesser money in that 1 month or 2 months and I make more money in that 10 months where I am right. That's the reason I told you, you cannot be right all the months when you do this. But overall, I have to make money, and I can do that if I follow risk management and as well as selling strangle. And you don't actually make 2 to 3% every month. Some months we make even 4 or 5% also, but some months we lose. End of the day, what you can make is about on an average 2 to 3% by selling strangle and following the risk management what I have told.
Yeah, thank you very much. Then CA Vikas Jain ji is having long query. From 1st September 21, there is 100% margin requirement. Is that mean I can trade only up to the opening ledger balance? That means intraday is of no use, as I have to maintain highest peak margin at the end of the day, and it is more or less like carry forward position. What impact do you see of this compliance on derivative markets? Will there be less value?
Excellent. His answer, yes, asked the question, he has also answered. Yes, from September, intraday trading is meaningless, or I will tell, we have something called as MIS product today, where on intraday basis, I can take leverage and broker gives you, because end of the day, your position is cut whether at profit or loss. But then once you have this 100% margin requirement from 1st of September, indirectly what exchange is doing is it is cutting that leverage which is there. Now, is it good or is it bad is the question, and does it result in reduction in volume? Definitely yes, it will reduce the volume. The mindset of exchange and especially the regulator here, SEBI, is to ensure speculation is lesser and people do more of delivery kind of a trading and they do more of investing. But then let me tell you, for a person who knows nothing about market, any which way he will lose. But now what happens, because of these regulations of exchange, he will still lose money, but he will lose it over a period of time. He will not lose it very fast. People who are brilliant, they will still make money, and these guys will still lose money, but the time period only gets extended is what I can tell you. and people adopt also very fast. So what people do, yes, and when you have too many people only on the selling side, there is competition even between sellers, there is competition even between buyers. So I say the rule of demand and supply and market forces will take care of this. But will it reduce margin? Yes. Will it reduce leverage? Yes. And will it make people lose less? No, they will lose over a period of time.
Then thank you. Then Hasim Raja ji from Jaspur, Uttarakhand, and Mukesh Rathod ji from Banswara, and lot number of members are appreciating the deliberation of our honorable guest speaker. We are having n number of queries.
Anup sir, I also want to admit taxation. I cannot do anything except telling you have to have Girish Ahuja sir, because I don't practice as a chartered accountant and I don't bother on tax because my mindset is always to make money. So your members have to excuse me for not taking those taxation query.
Rudraji, that's the problem I communicated in the beginning itself. That it's very difficult for the chartered accountants to come out of that bread and butter, the taxation and other compliance work and the attached function. This is the problem of our chartered accountants. So I think we have to come out of that. That is the most important thing.
Okay, next question.
Then lot number of Nishant ji from Dehradun is also appreciating.
Amit Kumar is just raising his hand. I think he has a question. Can we give him a chance?
Yeah.
Chairman, here, our Amit Agarwal secretary, sir.
Yeah, Chairman.
Yeah, please.
Yeah, Chairman sir, it's not my query, but I would like to add something here, that the very purpose of having these VCMs on very, very specialized topics and having the faculty like Rudraji, the very purpose is to give more insight about certain areas to our members on capital market and other, because I am the secretary and sir is the chairman of research committee as well as in the capital market committee. So we used to conduct more and more webinars on the non-traditional areas so that our members, because nowadays every year, every 6 months, we are increasing by a certain number of chartered accountants. Every year we are increasing. So as of now, we are 330,000 chartered accountants. For our professional opportunity, if we do not go for other areas, then there would be a tough competition in accounting, auditing, and taxation domain. So I think through these webinars, we want to build and the knowledge base of our chartered accountants. This is the thought process behind organizing such number of webinars. I think every month we organize 10 or 20 webinars on research and capital market.
Rudraji, we are of the firm view that chartered accountants are having the extraordinary talent. Capital market is there for the chartered accountants, and chartered accountants are there for the capital market. No professional can understand and contribute in a better manner than a member of the Institute of Chartered Accountants of India. So we should certainly try to see that how we can be very, very active in this particular field. And it is a field which is best suited for the chartered accountants.
Thank you so much. We appreciate Amit Kumar viewpoint that we want to ensure our chartered accountants even go to these areas of capital market and ensure. See, I am a chartered accountant again. That's the reason why we are all here. And in fact, I would love to hear from Girish Ahuja sir more on taxation front and start learning. You have to give me a admission ticket to be part of that program, sir.
Certainly, yes, without fail, sir. It's your program.
Thank you. Next question.
Then Vijay Kumar Iswarji from Ranchi, what will be index expectation after 10 years?
See, this is a question which I don't love answering, but still I'll give you an answer by default. Okay, yesterday Mukesh Ambani also made a statement. He said we will at least grow by 3x in next 3 to 5 years. Let me just explain this statement to you, and I want you to understand this is what we call as power of compounding. If you just give me 2 minutes time, I'll make everyone follow this and understand. Now, if you have just 10 lakh rupees with you, is my screen share visible, sir?
Yes. Yeah.
Okay. If you have just 10 lakh rupees with you today, and let me tell you, if you can make a return of 26% per annum, okay. Now people ask, how do I make 26% per annum? I'll come to that. You just spend 30 years of your time doing this, the end result will be, it is a whopping 100 crore. I repeat again, 10 lakhs if you have today, and if you can earn 26% return per annum and give a time period of 30 years, the output what you make is 100 crore. I always tell people, minimum you have to make 100 crore in your lifetime. And how it can be done, I tell them, if I assume you start earning from the age of, let us say, 30 and you retire at the age of 60, that means you have 30 years of your time. And if you can earn 26% per annum on your investment, and this is your saving 10 lakh, the output is 100 crore because of magic of compounding. But let me now tell, people say we cannot do 26%, Rudra. We do only 8 to 10% per annum. Fine. Even if you do 8 to 10% per annum, instead of 30 years, I will now make it 45 years. Still you get that output. So if you can't increase the return on investment, you have to increase the time. And now, instead of 10 lakh, if I put here 1 crore, do you know my answer is not 100 crore, it becomes 1000 crore. So what is the secret here? The secret is too simple. You have to ensure you play with these three things in life and you make everything higher. One, I should have a higher initial investment. My example was only 10 lakh. I should have a higher return on investment. This comes with learning, experience and expertise. You should at least have 26% and you should have a higher time period. And here I have just taken 30 years. Do you know why Warren Buffett is so rich? He started when he was 12-year-old. And today, even at 90 years, he is still going on. So he started when he was 12 years, now he is 90 years. Can you tell me what is his time period? 90 minus 12, 78 is his time period. I'm only asking 30 years. Now some of you will say, sir, we are already 60 years, sir. We are starting too late. No problem. I know you will live for at least 200 years. So 200 minus 60, still you have 140 years to go. I'm only asking 30 years. I don't want 140 years. Now, at least today you will learn why we say health is wealth. We never understood. I never understood why people say health is wealth. We never say wealth is health. We say health is wealth because if you live for longer period, your time will increase your T. Why Warren Buffett is so rich? Because even at 90 plus, he is still in market and he started very early at 12 years. So if you cannot control this, because you could not start when you were 12-year-old, you have to live more. Buffett might live for 95 years. You live for 130 years so that you will beat Buffett. And we have to ensure our younger generation, our son, our grandson, our daughter, our granddaughter, let them start before 12 years. Then we will surely beat Buffett if you can understand this concept. Hope I have explained. Thank you.
Great. Thank you very much. So nice of you. Then from Saudi Arabia, Sivaraman Sudarshan ji is asking, if we want to have more time and hands-on session on the topic, how can we approach that, please? Is there any website or any broker or the like? See, as far as this session is concerned, now Rudraji has just made the beginning at ICAI platform. Continuously, we will be having n number of programs of Rudra sir with his permission. And in addition to that, each and every program will be there on ICAI YouTube channel, which will be available to chartered accountants or to each and every member of the public in each and every part of the country and outside country. And in addition to that, I think you can go to the YouTube channel of, you have to put only Rudra and you will get each and every information. Correct me if I'm wrong.
In fact, I'll just make a disclosure. I always believe in not to advertise any of your product, because if product is good, you don't have to do any advertisement. And I'll just tell, if people want to listen to Rudra more and have these type of sessions, only possible if you can contact Anuj Goyal sir, Central Council member, and the team which has organized now this program. Only for them, I come and do this type of programs. So just contact them and have more of these type of sessions. I would always love to share my small knowledge with all humility. And I just want to make this big statement of Rakesh Junjunwala. And he says this, He says, and his guru has taught him this, Radhakishan Damani. He says, there are many ways to become rich. I repeat, there are many ways to become rich, but there is only one way. But there is only one way to stay rich. Be humble.
Right.
Yeah, but credit to Rakesh Junjunwala and Radhakishan Damani. This is not my statement. Okay, so I want to give them the credit.
But you are following this in letter and spirit that everybody can witness.
Yes, yes, Anup sir. We don't want to reinvent the wheel. They have put all their efforts and they have given the path. Our job is to just follow them.
Yes, yes, very true, very true.
We don't want another Bhagavad Gita. Krishna has given a lot. If we can go through it once, it is enough.
Yes, yes, very true.
Yes.
Then CA Dr. Ashish Agrawalji, very senior member from Meerut. Good evening, Mr. Musi. If possible for you, can you comment whether to hold or sell on any of the following equity shares? First Source Solutions, South Indian Bank, IFCI, Reliance Power.
Okay, I'll just give an answer. Normally, I'll not take stock specific query, but because this is a closed group of community and a sweet chartered accountants who are there here, I'll always tell wealth is never created out of stocks like Reliance Power, Reliance Infra, Suzlon, all these stocks. In fact, let me tell you, Reliance Power has moved from something like 2 rupees now to 14 rupees. People are saying it has gone up 7 times, 700% return in last 1 year, or some of them have given 1000% return. But none of them know this stock has come down from 5-10 rupees to 2 rupees, and there was corporate announcement in between because of bonus share, all that stock splits and all. And after adjusting for all the corporate announcement, 330 rupees is the price of Reliance Power. And from 330, the stock came to 2 rupees. From 2 rupee, now the stock is at 14 rupee, 15 rupee. Now you are only seeing the move from 2 rupee to 14 rupee. But you have forgotten the move from 330 rupees to 2 rupees, or even now at 14 rupee, it has destroyed wealth. Wealth is never made out of these type of stocks. They're only good for trading. They're not good for investing. And whether it is Reliance Power, Suzlon, or I can name JP Associate, or you can name hell lot of these type of stocks. You can create wealth only through good companies. I always say, this is Rudraology or Rudra statement. If you want to buy good stocks, the rule is very simple. Buy quality at reasonable price during crisis and sit tight. I repeat again, buy quality at reasonable price during crisis and sit tight. What do I mean by this? Just because a stock is 5 rupee, 3 rupee, 2 rupee, people think I can buy large quantity with a small capital. But you are buying large quantity of shit. Sorry for using this word, but I want it to be so strong that people don't do this mistake. It hurts to me when people lose money. It does not hurt to me when people don't like me. I'm not here to have the fun part and the like part of people and then say, wah, 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 wah. What is the use of that when people are losing money and they don't understand the realities of market? So I always say, buy quality and not quantity. Buy quality at reasonable price. Whatever, however good the company is, you can't pay unreasonable price. Rudramurthy session was super. You know why? Because it was given free. The same session, if I say it is worth 1 crore, you have to come and pay. People say, no doubt this session was good, but 1 crore is too much. Why am I telling this? Infosys is a super company. Reliance Industry is a super company. But at what price are you buying is important. So buy quality at reasonable price. Then only we have margin of safety. And then when will you get this reasonable price? During crisis. When you had Corona or when you had whatever events like macroeconomic event, which will have prices to simply fall down and the company is still doing great. In fact, Nestle, when they had the problem of lead in Maggie and blah, 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 stock price from 5,000 came to 3,000 and all. That was a fantastic time to buy Nestle even at 3,000. And I don't want to buy something at 14 rupee, 13 rupee, just because I can buy quantity. But can I trade in these shares? I buy it at 13, sell it at 15. If you are a good trader, you understand the price movement, you can. But don't add these stocks for wealth creation. They are always wealth destroyers. So buy quality at reasonable price, which you get it during crisis, and sit tight for a long term. You will create all the wealth of this world and you will be happy. You can give more only when you have more wealth. So I believe in distribution of wealth. But for that, I believe in accumulation of wealth too, because everything we have to distribute. And I believe only this one big statement: nothing in this world can happen without the blessings of Almighty. I'm not here as spiritual guru to talk spirituality, and I'm not doing it. But I always say luck follows only the hard-working people and people who believe in that God, or you call it Allah, you call it Krishna, you call it Yesu, you call it mother. For me, my mother is the first God, then comes all other gods. If you believe this and you have the blessings of Almighty, money comes, it pours at your feet.
Thank you. Then CA Praveen Thakkarji from
all
Muscat.
His talks, whatever he told, R Power or the list, what he told, South Indian Bank, blah, 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 they're all wealth destroyers. You should not buy because it is small price and you get large quantity. It is only good for trading, and for investing, do not even see this type of stocks. That's what the main lesson was.
Yeah, thank you. Then CA Praveen Thakkarji from Muscat. Which option is best to buy?
Very simple. Again, you have to see the underlying assets. See, for example, right now, I'm just giving you an example. I'm very bullish on, let us say, SBI. I feel PSU banks can do good. And you have stocks like even Canara Bank and a lot of good PSU banks based on valuations. I still see comfort in them. So I might buy these options, or better part is go and sell put options of these. Because even if they remain at the same price or move slightly down, you will still make money. For example, I'll say I'll go and sell 400 strike price SBI put option. So if SBI remains above 400, whatever price it is above 400 for the current month, let us say, I still eat all the premium. So you have lot of stocks, lot of opportunity in market. Many a times people ask me, market is very overheated. So don't you think there will be a burst of this bubble? Answer is yes, sir. But then I can still find good stocks in this market also to invest. I always believe every time is right time. But what is important is which stock are you buying? For me, ONGC, even in today's high overrated market, is available at a 3 PE multiple. The second best stock after Reliance, large cap. What more you want? But then I cannot do ONGC intraday trading. I'm looking at a longer time frame. Can I still pick a lot of mid and small cap stocks which can do wonders in this market? My answer is yes. But what people do, they're in WhatsApp. They think because they're in WhatsApp, everyone who does research and who are good, Rakesh Jhunjhunwala, Rudra Murthy, Radhakishan Damani, and all Motilal Oswalji, who is also a chartered accountant. Rakesh Jhunjhunwala is also a chartered accountant. I am telling you, only chartered accountants can come to this level. So you can't expect, I can't expect just because I'm in WhatsApp, Rakesh should do all the research and he has to send that research to me and I will also buy the same share. But then let me tell you, all these guys, even today, Rakesh ji at the age of 60 years, you know how much time he spends on market. Sometimes I think wrongly that he has already made so much money. What more he has to make? But let me tell you, his interest is not in making money. His interest and his passion is in market. Money is only a result, but his passion is in market. And my passion is in market. But more than that, my passion also lies in giving back my learning of capital markets to people, which Rakesh may not have or which Radhakishan Damani may not have. Each one of them have their own purpose and passion, which is good for them. Because I have this passion, you can see my presentation, my whatever talk and all that comes great. But you give me some topic where I don't have the passion, where I don't have the energy, you will say Rudra is the worst presenter we have ever seen. So always work on your passion and that gives you the energy. My passion, energy is only here, not elsewhere. So it is so important for you guys to understand that even in this market, I can find good stocks to buy. And even in a bad market, if you would have bought last year, when COVID times and all, I'll tell you so many stocks if you would have bought where you would have lost money in last 1 year, 2 year. People say Nifty went up 100% in last 1 year. What is important is, has your stock gone up in last 1 year? Is the big question. Buffett says this beautifully. He says, do not focus on the forest, focus on your individual tree. I say, do not focus on all the girls of this world, focus on your wife.
Very true, thank you.
Okay, next question.
Yeah. Then CA Rajesh Jainji from Gorakhpur, you tell to earn 5% money from trading, then go for investment to earn 95% money. If I am putting 1 lakh for trading, then at which level I should leave the trading and divert for investment only?
Very simple. I always believe you should not lose more than 30% of your capital, because if you lose more than 30% of your capital, to get back to break even from 70 rupees to go back to 100, you have to earn close to 50%. So any trading you do, I say don't go for a loss more than 30%, come what may. And if you lose that money, you have to stop trading, sit back and see what mistakes have you done, correct them, start small, don't start with all the money what you have. And once you come in form, then you can start increasing your capital size. I always say form is temporary, but class is permanent. Applies both for cricket and trading. Next question.
Yeah. Thank you. Then CA Mehta Balamji from Patna. He's appreciating and asking for the PPT. I think we will make available the PPT to each and every delegate.
Anup sir, we have gone more than 1 hour, 5 minutes, 65 minutes over time. Are still people there, or have they slept, or have they gone home?
No, everybody is here. I think more than 1,000 chartered accountants are going to in the capital market only after your deliberation.
Superb. I'm so humbled with the. Shall I give you a technique on how to reduce the number of questions and end the program soon?
Yeah.
Charge them 1 lakh per questions. Questions will stop.
That's
Take all this on a joke and lighter note, because
and it's a discounted rate. I'm very well aware that it's a discounted
we have not got a break even to just go out of our seat. And this has been a fabulous session. Okay. Yeah. Even in a movie, if it is a 2.5 hour movie, after 1.5 hour, they give you a break for 10-15 minutes. This has been beyond a movie and entertainment where we are going non-stop. 3 hours. Okay. And that will not be early morning hours or the first one. We have already done for the day. It's a working day like Friday. And there are people. In fact, sir, if you can mention what's the time of those participants, I'm sure some of them are attending night at 12 o'clock or 11 o'clock.
Yes.
Yes.
Yes, it is there.
Yeah, that is the amount of commitment these people have. I have to just salute, bow my head with folded hands, tell them I'm so proud to have lovely audience like you to share my very small knowledge on capital market. Thank you so much. Yes, sir, go ahead. You have more questions, I have more answers.
This is the magnet of your knowledge. And Saloni Khandelwalji from Jabalpur, which is the best trading platform? I think you have already answered. Which is the best trading
one was
platform?
On the software. The trading platform, if people ask, yes, if you are looking at technology savvy trading platform, Zerodha is one of the best one in Indian market. Me being a broker, I'm not telling my name. I say Zerodha is the best in terms of trading platform. Next question.
Yeah, from Delhi, Harshit Goyalji. When will you release the audio version of your book, Mind, Market and Money?
In fact, I'll tell you the book, whatever I've written, Mind, Market and Money, is not even 1% of the real content what I have. And that book is actually written by my student Indrajit, who is a co-author. So I'm now telling you power of teams and how to write books. In fact, I used to read this Sunil Singhania book and it was so big. I was wondering how can he write so much and in lifetime you cannot write. Later on, I understood there is a science of writing book. You have 100 chartered accountants with you. Each one will write one chapter or one subtopic, compile everything and you can put your name. That's how I've written this book. And I'm honest to tell you that I'm honest to tell you that, but then that book audio version also cannot even substitute this 3 hours of learning what you have got. That is only 1% of what you have got it here. Next question.
Yeah. Viren Sharma ji from Dubai. Aram sir, can we make any strategy with derivative market for good quality stocks we have in our demat account?
Super. We have something called as covered call. What is a covered call? Let's say, for example, I have Infosys in my demat account. It's a quality good company stock. I want to make more return on this stock. What I do is I hold my Infosys and I sell an out of the money call. For example, I'm saying Infosys is now at 1,600. So I hold my Infosys and I sell an out of the money call, like let's say 1,700 call or 1,800 call. Infosys will go up. I make money in my demat or the holdings of equity position what I have in Infosys. And if Infosys does not go beyond the 1,700 and 1,800 calls what strike price I would have returned, I make money on my call selling also and on my delivery position what I hold. By this, we can enlarge our profits, and in fact, within 3 years, you can make the stock what you have free by following this covered call strategy. And by chance, if Infosys goes up in a heavily uptrend, normally these stocks doesn't go so fast because they're all blue chip, which gives you 20-30% kind of a return annually on an average, but does not go up. But if you see the Infosys same stock, last 6 months, 1 year, this stock has given huge return. But if you understand hedging better and you do covered call, you can make your investments free for 3 years. If you are dumb, 5 years. And if you are intelligent, might be 2 years. So covered call is a strategy what you can explore, which many people do. Having equity delivery position, you sell out of the money calls of them. And if hugely it moves also, no problem. You have this stock with you in the underlying asset. You make money there in the huge up move, and the covered call what you would have sold, there I can give delivery of this stock. So look at covered call, it will help you a lot.
Yeah, thank you. Then CA Mukesh Jainji from Udaipur. How to decide to short or long any share based on strike price?
It cannot happen through strike price. You have to understand technical analysis, especially market profile. So this book, someone who asked me on Mind Market Money, is on market profile. It will help you to understand the short-term movements in price.
Yeah, thank you.
If you want to go based on strike price, as I told you, see at what strike price you have the highest open interest. Based on that, you sell those options and you can still make money. I gave you an example of Nifty. This can be applied even for stock. So wherever you have highest open interest, that strike price, if you sell, generally that will be defended by option sellers.
Yeah, thank you. Then Shrestha Godwani ji from Kanpur. Sir, while making strategies, which should be given preference? Risk reward ratio or probability of profit, as both are always opposite?
I always say risk has to be given the first importance. And let me give the statement of Warren Buffett. Buffett says there are only 2 rules for successful investing. Only 2 rules. He says rule 1, don't lose your hard-earned money. Rule 2, don't forget rule 1. So risk is everything.
Yeah.
If you can manage that, return will take care of itself automatically. Probability, risk, reward, all that is later. But no doubt we have to see risk and return together. That's what we do in risk reward. But I give number 1 importance always to risk.
Yeah.
Or can we just end, or if you have more questions, you have to give me.
I think within 5 minutes we'll end.
Okay.
CA Harsh Agrawal ji from Jhansi. Is it good to buy in the money call rather than buy future?
I will tell you, if you can catch momentum, then buy an in the money call, or else future is better. Because there is theta or time decay which will happen for an option buyer. Just give me 1 minute time. If you can just take any questions on taxation, 1 minute, I'll be back.
Yeah,
please.
For Jhansi audience, I would urge that we have a resident refresher course. Therein, we will be discussing the capital market.
Yes. Certainly. Yeah. I think still we are having more than 3,500 chartered accountants with us, and lot number of queries are there. Rajesh ji, we can't. we can't answer each and every query. So we will ensure that if Amit ji can ensure to answer the queries later on. From Jhansi, we are having Harsh Agrawal ji. How we know from the total open interest that how many are call buyers or call sellers. So we'll ask one or two query, and then Jasmeet ji is there. Jasmeet ji, you are there?
Yeah, he was there. He was
Yes,
there.
sir, I'm very much here, sir. I'm very much here.
Yeah, Jasmeet
Yeah,
ji.
yeah. Your video is off, na? Rajat ji and Rajesh ji, I think they would be planning to earn at least 1 crore today out of the capital market after Rudra ji's deliberation. And all our honorable viewers from each and every part of the world are here. I am once again announcing that we will be having a national conference, very, very important national conference of Committee on Capital Markets and Investors Protection, hosted by Dehradun, Haridwar, Ranchi and Dhanbad branches for 4 days, 5th July, 6th July, 7th July, 8th July. Dr. Amit Agrawal ji is sending the link to each and every chartered accountant who has joined today. We can directly send the link. So welcome back, sir. I'm really sorry.
Thank you. Sir, also
that you
would
can't
appreciate,
even...
Anuj sir.
Sir, I have also not gone for the natural call.
No. It is just
sir,
call.
I have also not. Yeah.
Sir, I have passion towards market, so that is only the thing which holds. And would appreciate if people who are sending you all the questions, I want each one of them to share their feedback about the entire program. That is the only energy and take back what I can do. So each one of you are still staying tuned. Do give me a feedback about this program, and that will help us a lot to improve. And just tell us, what did you like from the program? Was it good? Was it boring? Non-stop. We have gone now for 3 hours 15 minutes without a break.
Yes, sir. Thank you. Then Harsh Kumar Agrawal ji from Jhansi. Jhansi, how we know from the total open interest that how many are call buyers or call sellers?
Very good. No, total open interest, always you have the same number of call buyers and call sellers, or the put buyers and put sellers. But what is important is, if you have 100 people who have bought call, they will all be retail guys. The guy who is selling that 100 quantity for all the buyers is an institutional guy, because option selling requires more capital, whereas option buying, you just pay the upfront premium. So number of call buyers and sellers at that open interest is same. But then the guys who are playing from the retail side, they lose. The guys who are there on the institutional side, they make money. This is just a general statement. In fact, as I told you, I had very small capital when I started and I was doing option buying. Even today I do option buying. But when you are an option buyer, you have to catch not only the direction, but also momentum. As an option seller, even if you are wrong on so many things, still you make money. But option selling is a game of big capital, smaller return on investment, but a big size profit. As I told you, for Rakesh Jhunjhunwala or even for Warren Buffett, they have huge capital, and instead of putting that money in a bank and getting 4 or 5% return, they want to make, let us say, 10, 12, 14% return. It makes so much sense for them because of the size of capital. Even the 10-12% return makes a huge difference to them. But then if you have only capital of 1,50,000, if you make 10% return per annum, the money what you earn on that 10% on 50,000, 1 lakh capital is too small. Better not to be in market. So option buyers generally are retail people, and option sellers are generally institutional guys. The number of buyer sellers quantity has to match, but then we always believe the option sellers will be right. That's the reason why we say the open interest at that strike price, which is higher, will be generally defended by option sellers. Hope this point is clear.
Yeah, then a lot number of members and CA Madhur Bansalji from Muthra want the recording of this program. Amit ji, you can send the YouTube link also and the recording also to the Dehradun branch office bearers also and the participants also, so that they can further disseminate it. Yeah,
as you even mentioned, if this program is put in YouTube, I want to even share that in my YouTube channel. Because
Yes,
I
yes,
don't, in fact, today what happened, I'm just telling, you spoke on the natural call and that 1 minute break. In fact, today I'm doing a session from morning 11 and it went on non-stop till 3:30. I had my lunch between 3:30 to 3:45, joined back at 3:50 here and was there at 4 o'clock. So today my session, what I gave to you is after a session of about 5-6 hours, which I've given morning, and then I've given this session. But still my
So
energy
hats off,
levels,
sir. Hats off to you. So this is the dedication and devotion, sir. We have to learn. This is something really great, sir. Hats off to you.
So many people
Something really
bigger
great.
than me. Each tree is taller than the other.
Thank you, sir. So nice of you.
Thank you.
We
Yes,
have to learn a lot from
question,
you. Umesh Kumar Dangayat ji from Jaipur. During trading hours, how we can find out open interest is increasing, decreasing on timeline basis?
It is possible. You can just see your terminal itself, trading terminal itself, which will give you about total open interest. You don't even have to go to any software. I don't know if I can show that on my screen. Yes, right now I'm just showing you. You can see open interest as a column here on my screen last, and this keeps changing as the market is on. So it is available on your trading terminal itself during the market hour. You can have open interest, which is there on my screen. Last column on the right hand side, which I'm showing to you. Thank you.
Thank you. Great. Then CA Rajesh Agarwalji from Bikaner. Any stock idea today for long term to create wealth in next 5 to 10 years?
For
I
that,
think at the end of the
till
program,
the end, we told after all validatory vote of thanks, only last we will give that.
yeah,
Or else after I tell the names, people will not stay for vote of thanks.
Then CA Pradeep Paul ji
This
from
is experience
Jamshedpur.
of handling seminars. Okay.
CA Pradeep Paul ji from Jamshedpur. What is selling strangle?
What is selling strangle? That is selling out of the money call as well as out of the money put. Whatever I explained is selling strangle only.
Yeah, thank you. Then Rajesh Janji from Gorakhpur is also appreciating, and number of members are appreciating your program. And then from Korba, CA Priyanshu Jaiswal ji, what are the characteristics of a good quality stock for long-term investment?
Very, very good question. And I'll give you the simplest answer. Try to make notes if you want. And I had already made a statement. I told buy quality at reasonable price during crisis and sit tight with your position. This is what I told to buy good stocks. Now is characteristics a company should have if you want to invest on a long-term wealth creation. Number one, I say 99% of any good stock investing for long-term is to do with promoter. What's the difference between Infosys and Satyam? The difference is between Narayan Murthy and Ramalinga Raju. That's the difference. If you give a good promoter even a bad business, he will still turn it around with his skills, with his perseverance, with his value system, and with his hard work. But if you give a bad promoter even a good business, he will close it. What's the difference between Mukesh Ambani and Anil Ambani? Both came from the same family, both came from the same parents, but what was the difference between both of them? So I always say 99% of buying a good company is you have to see the jockey first. If you give a good jockey even a bad horse, or you give him even a donkey, he will make it run like a horse. I always say, no, I want 100 dogs led by a lion rather than 100 lions led by a dog. That is what Napoleon says. What is the difference you see here? See our leader, Anuj Goyal sir. CA, ICWA, ACS, and see the amount of energy he and his team members has here. You are only seeing Rudra's energy, but you don't know Rudra is 38. At his age now, or all those people who are there, Rudra, I don't know whether he will be there in this world or whatever. I don't want to take anything negative, but I'm telling you, you can't compare Virat Kohli with Tendulkar today because the number of matches played by Virat Kohli and Tendulkar are not same. But then I want to tell you, the energy level of Rudra at the age of 38 cannot be compared with energy level of our team members there who are more senior to me, and those guys having still the energy level of listening to Rudra for 3 hours 25 minutes without a break in between. That is big. And I want to just give you one hint here. When I saw Mukesh Ambani in Bangalore, he had come to IIM Bangalore, and PG Apte was one of the professors there, and Ambani was just standing in front of PG Apte, and he was standing with folded hands. I was just seeing Mukesh Ambani standing with folded hands in front of PG Apte, was just sitting aramse on a chair. Everyone told, see, PG Apte is such a great person. Ambani is standing in front of him. For me, more than PG Apte, what I saw was Ambani is great, because with all the money in this world, richest Indian, richest Asian, he could have bought a golden chair and then sat in front of PG Apte. But with all that money, he was still respecting PG Apte's knowledge, and he was standing there with folded hands. That's what I loved. I always say, there are too many people in this world who are very humble. You know why they are humble? Because their pocket is empty, or they have achieved nothing in life. Being humble with all the achievements of life, with all the money of this world, that is real humbleness. Because being humble with nothing is normal. Everyone will be humble because of their failures. But being humble with all that money is what makes me a special person there, which I saw in Mukesh Ambani that day. And I'm telling, we have so many humble people within you, the people around what you are seeing. And you think Rudra is here, someone who is having highest energy and giving great delivery. No, Rudra is too small. It is just the blessings of Almighty Krishna and my mother who always gives this energy and passion. And lovely audience, I always say 99% is promoter. Why I gave you this example? What you see here, I see another group of chartered accountants or another group of professionals, MBAs, or someone organizes the program. And if I like the person there, I go there and give my address. But I don't see this type of energy there. Why? Because of the promoter, because of the team whom you have there. The same applies even for a company when you select. Any business, if Narayan Murthy does, I will invest in that share. Vijay Mallya, no. Anil Ambani, no. So you have to look at promoter, number one. Number two, see whether the business, their product, their service can exist for next 10 years, 15 years, 20 years. And see the adaptability of that business, especially in this disruptive world today. Adaptability is the key. So I used to feel, never ever, I imagined in my wildest dream even that I can do programs online like this. Even today, I'm not a tech savvy guy. But then I was ready to adopt. Today, whether Corona or no Corona, even after Corona, if you invite me, I will still tell you, let us have the session in Zoom so that participants are at their comfort to attend the program. You have recording, you can just distribute to people, and this for me is much better. People are always saying Corona is taking out a lot of opportunities, we are facing challenges, all that. Let us pray God, thanks for Corona, and because of that, we have adopted. If you are ready to adopt, success is there in any field, and if companies can adopt, why did Kodak fail? Because they were not ready to adopt for digital technology. They were still in the reel, whatever was there. And a company which had 87% market share on film or the reel or the camera part, they failed, and the company failed miserably. Why did BlackBerry fail? And I can give a lot of Indian companies example also. So bet on the promoter first. Second, see whether the business, their product, their service can be there for next 10, 15, 20 years at least. And three, see whether they are adoptable. And if these conditions are met, then I told you, see whether you are buying it at good price so that you have margin of safety, and sit tight with them. You will surely make big long-term wealth.
Great, sir. Thank you very much. So nice of you.
Thank you.
The Sudhir could, and number of members are appreciating your deliberation, and number of members, hundreds of members continuously are communication is coming, sir. Sudhir Kulshrestha from Jaipur, what is the fate of GIC? I bought through IPO.
Okay, so again, we are getting some stock specific query, but I feel, I don't know the price at which you got it in the IPO, but if I just even follow GIC, but not so close. And if you want me to just give a quick view on GIC Housing Finance, I still prefer an HDFC in that particular sector than looking at GIC housing finance. And there is no problem in GIC housing finance as such. And I feel personally, it's a good stock. You can even accumulate and average it. For short term, I don't give you an opinion unless I see technical charts and all. But for long-term investing, GIC housing finance is a good stock which you can hold and average. Next question.
Yeah. So, and number of members are appreciating, sir, continuously.
Thank you
Pali,
so much
CA Deepak Salecha ji, CA Ankit Parak ji, and number of members from Muscat. Gaurav Bansal ji is asking from Muscat, is the rule of 50% cash and 50% collateral mandatory for from the exchange, or the brokers are imposing on their own?
No, now some brokers, what they're doing is when they have too many clients with them, large client base, like for example, Zerodha as a broker who controls most of the retail traders, and he has so much volumes with him, he will say, no, you have to have 50% collateral and 50% cash. But whereas there are some brokers where they have their own funds, or they have funds from other clients which are remaining idle, then what they do is they even accept 100% collateral from you, and they don't want 50% cash and 50% collateral. So it's not a rule from exchange, but it's a rule from broker. And very soon, exchange might take it as a rule to implement it not at broker level, but at client level. So this is there already in the mind of SEBI as well as exchange, and they might bring this rule. But as of now, the rule is at the broker level and not at client level. And some brokers, even at client level, they make it implementable, or they implement it at client level itself, because you don't have, they have so many clients and they don't have that much of cash component. So even though exchange sees it at the broker level, the broker applies it at the client level. So this is what you have to get through.
Yeah. Then lot number of members, Pawandeep Singh, and I think hundreds of members are appreciating.
Thank you. Thank you for each one of you for your kind words. It means a lot.
And one, thank you. Saudi Arabia, Sikhamuji is telling, sir, these deliberations seem more relevant to intermediate level users of the stock exchange. Could you please recommend any course for the beginners in this field to understand more?
I'll give you a free course to understand all this. Same Rudramurthy. If you go to my YouTube channel, Rudralogy, I have a separate playlist called as Profitable Options. I've done 8 minutes, 10 minutes, 15 minutes kind of videos. And only on option market, I've given a lot of videos free. So as a basic beginner level, if you want to go through these things in your leisure, make a lot of notes, replay that, watch it again, all that, you can definitely look at my YouTube channel, Rudralogy, and take this today's session's recording also, watch it again, second time, third time. See, I'll just take 30 seconds to answer this. Bhagavad Gita, I read it for the second time, third time, fourth time, fifth time. Every time I read, I get a new perspective. And I was just wondering, what is the magic in this book, Bhagavad Gita? Every time I read, I get a new perspective. How come? Actually, when I read it last time, Rudra's understanding, his knowledge level was, let us say, at one level, level 5, level 6, whatever. And next time when I read, I have got more experiences to my life that has got added to me, which is good, bad, everything. And when I read it for the next time, I get a new perspective. It is not because Bhagavad Gita has a magic. It is because I am growing and learning. The next time when I read it, a lot of experience has got added to my life. Now, at least today's program, whatever I have been here, I have learned a lot through the questions what people have asked. I've understood more on taxation front also, and I've understood the humility, humbleness, dedication of people who are there here in this program. But then I want to tell you, you want to see the same program second time, see how much more you will get. And not just on option market. I've given so much of learning on trading, investing, I've told on risk management, all that. So just watch the YouTube channel, and not just my YouTube channel. You have a lot more sessions by a lot more learned people in YouTube. Spend some time there. And if you like my style of presentation, and if you want to watch more of my videos, my YouTube channel Rudralogy is there. And today's program, they will upload in the Institute YouTube channel. Do watch that.
As well as we will send it to you also, so that you can also upload on there. And lot number of members, Amit
channel.
Agarwal ji. Yeah, lot number of members are telling that please send the links of each and every presentation without fail. The presentation of sir also, and the video link also, the YouTube link also.
Yeah,
so please
sir,
ensure
if you
without
have
fail that
already
it should happen in each and every program without any exception. And that's the humble request.
Sir, if you have collected anyhow their email ID, you can send this program's YouTube link after you upload it to the institute site. Plus even my PPT. Yeah, my PPT will be shared to all of you. I'm sure that will reach you guys. Yeah. Thank you.
Yes. Thank you. Then Mukesh Janji from Udaipur. Feedback on program. The program was an awesome, and we learned many new concepts of the capital market. We should continue such program in future also. And number of members are appreciating you like anything, sir.
Sir, Anuj sir, I am making this statement again. This can only happen if you give me the same team of people who are there, and under your leadership, if it happens, I will come. If not, no.
No, it would be there, sir, without fail. And
Okay,
we will have the better team, that team also, and in a better manner also.
Anuj sir, just I'm telling you with my experience, sometimes what I do, if I'm not happy with the session or the whole team of people or the questions what they ask is not good or the members who have organized are not good, you know what I do? I say, sir, I have another program now, or I'll say I cannot reach back home, it is raining or something, I will find a reason to get out. But today I'm just sitting here so much because I am getting energy. In fact, tomorrow, day after, both the days, I have a non-stop session and I do weekend programs for a lot of people there, which I would have agreed. Now you are telling me July 5th also. But I can only tell you, if I'm still staying here, it is only because of your participants who are there in this program, their wonderful questions, and the team who is there here.
Thank you very much, sir. So nice of you.
Next question.
Yeah, Vikas Janji from Jaipur. Sir, from same stock, CLSA give buy target, while Morgan Stanley gives sell target. After result, whom should we listen?
Very good. Don't listen to both of them. You learn market and you interpret based on what you find is good. It is something like this. And people ask me, if everyone are following technical analysis, how can one fellow say buy, another fellow say sell? Or if someone is following fundamental analysis, one guy says this is a fundamentally strong stock, another guy says this is a fundamentally weak stock. What should we do? So my answer is very simple. Everyone does not like Virat Kohli. Some of them like even, let us say, Rohit Sharma. Everyone does not like Aishwarya Rai. Some of them like Bipasha Basu also. So it all depends on their taste. And end of the day, what suits you is what you have to choose. And I always say, take inputs from everyone, whether it is Rudra Murthy, whether it is CLSA or Morgan Stanley or XYZ. End of the day, you take the responsibility, see what suits you the best, and you make a decision because it is your money. You have to take the responsibility. I cannot blame tomorrow if I lose money, it is because of CLSA. And if I make money, it is because of my decision. So I always say, and this I've learned hard by market and by experience. Market is the biggest guru. Rudra Murthy is not even small molecule or minuscule in market, and you have to respect market, which is God for me. And then comes all other things. So whether it is CLSA, Morgan Stanley, get all the inputs, you make the decision what is suitable for you and what you find right. That is what you have to do.
Yeah, sir, at least 500 persons, 500 delegates have written that it is an extraordinary session and we should request Rudra sir to be with us again and again. And they are ready to stay even for 5-6 hours for Rudra sir. And lot number of them are requesting for the tips also.
Sir, please make one announcement also. Anuj sir, Rudra is married and he has a son also, okay?
Yes.
Okay.
So we will conclude immediately, sir. We are concluding. Rohit Samriji from Varanasi.
No. I told because you said so many of them are loving me. That's the reason I told Rudra has a son and he is married. And he has no intentions to marry again.
Sir, Lord Krishna was loved by a lot number of persons. And Lord Krishna also do love each and everyone. Pradeep Paulji from Jamshedpur. Sir, I am very delighted to see this session. Please do frequent sessions like this on the weekends. Okay, great. Then Pradeep Palji is very past chairman of the Jamshedpur branch. The city is named after the Jamshedpur ji Tata. Yeah. then Mukesh Rathorji from Banswara. Now I think we have to conclude because we have already exceeded by more than 9,500 minutes. So thank you very much, Rudra sir. We are having the presence of Rajesh Gupta ji, Rajat Sharma ji, and we are having the presence of Jasmeet Chaudhary ji, our Asardar Sardar from Dehradun, who is the secretary of the branch, the past chairman Rajat Sharma ji, vice chairman Rajesh Gupta ji. So may I request Jasmeet Chaudhary ji, my brother from Dehradun, the secretary of the branch, for his final words and the vote of thanks. Over to Jasmeet Chaudhary ji.
My goodness, thank you so very much. Thank you so very much. Our very own most honorable Central Council member, Shri Anuj Goyal ji, who also happens to be the chairman of the Committee on Capital Markets and Investors Protection. On behalf of my Dehradun branch, I would mention that we are so very privileged that you chose our branch as the host. And many thanks to our famous speaker, C.A. Rudramurthy ji. Why famous? Because if someone were to Google his name, it would return more than 35,000 results in a quarter of a second. Our participants may probably not be aware that his book, Mind, Markets and Money, is one of the best-selling books. Anuj, not many CAs have authored the books. And to my understanding, C.A. Rudramurthy ji is probably the youngest CA to have done that. He's not just another chartered accountant. He's someone we really look up to. So very proud to have him alongside. And he has been absolutely fantastic, I must say. Today's topic was most interesting, something that scared me all this while. But you have charged us, and we look forward to augment our knowledge. Besides the conceptual learning, my take for the day being, not taking risk is the biggest risk of life. Thank you, everyone. Sincerely acknowledge your gracious and humble presence. देवभूमि उत्तराखंड के members की ओर से हमारा आभार स्वीकार करिए.
Thank you.
And Rajat Sharma ji, our past chairman, want to say something? Rajat Sharma ji.
Sir, I would just like to say that, sir, ऐसा सेशन सर मेरे ख्याल से इतिहास में दर्ज हो गया सर देहरादून ब्रांच के लिए. इट्स एन ऑनर फॉर देहरादून ब्रांच टू हैव अ स्पीकर लाइक रुद्रमूर्ति सर टू बी विद अस. एंड सर, अंडर योर लीडरशिप वी रिक्वेस्ट यू कि आप ऐसे ही प्रोग्राम्स हम सबके लिए कराते रहें सर. थैंक यू सो मच सर. थैंक यू वेरी मच.
And he is coming back on 5th when we will be having more than 25,000 chartered accountants from each and every part of the world. And we look forward to see that how Rudraji will rock again. We are still around 4,000 chartered accountants with us from each and every part of the world, because lot number of members are particularly there from the Gulf countries. Rudra sir, we are having very, very strong presence of our chartered accountants. Around 25,000 chartered accountants are there in the Gulf countries.
My special pranamas to all those people. And I'm really, what do you say, humbled by these people who are part of this program. And I'm sorry if the time there is midnight, 12 o'clock, 1 o'clock, 2 o'clock, I don't know what. In that time also, you have given not just your time, but your family time. And you have been so good, committed. Thanks for asking all this question and giving me an opportunity. So to all Gulf members, people attending across the country, outside India, across the globe, thank you so much. And special thanks to people from my Bharat, Amara Bharat, and Mera Desh Mahan. So thanks to each one of them who are attending this program from India too. Thank you so much.
So thank you very much, Rudra sir. Thank you very much, each and every member from each and every part of the world present here. I know in some of the countries it will be midnight, and I'm really grateful to Rudra sir on behalf of all the chartered accountants from each and every part of the world. I am having the statistics. I think more than 5,000 chartered accountants were live, and I think the way he has shown to all of us, I think one of the most important lesson, which at least I have learned, and lot number of chartered accountants must have learned, that how one can be humble in spite of so knowledgeable, in spite of so successful. I think the most important learning, if you are humble, then you can reach to any place, sky is the limit. Even you can be above the sky. So thank you very much, Rudraji, and all of us are waiting for your tips. If you can give some of the tips, nothing like that, sir.
Okay, I'll just take 1 minute time with which we can end the session. I feel definitely market is overheated, and on an overall market level, if you ask me, this in terms of valuation, this market on an overall level is definitely, I will say, heated, especially in mid and small cap, and even quality stocks have gone beyond valuation comforts what I look at as an investor. But then let me tell you, normally market goes up beyond fair value, and similarly it even comes down below the fair value also, way down. And I feel even in this market you have great opportunity to buy good stocks, but then you have to be really careful. I will say move from quantity to quality in this market. What do I mean by that? So in your portfolio, let's say you have 10 stocks and you have some of the stocks there which has no quality. Exit that, shift to stocks with higher quality. Move from momentum to value. This is the time when I have to move from stocks which was more momentum driven stocks to now value driven stocks. So move from lower quality to higher quality, move from momentum stocks to value stocks, move from mid and small cap to large cap, because I don't believe in sitting in cash unless I have a conscious decision of taking that big call to sit in cash, and I don't find any other opportunity to invest in market. I don't find good stocks at good price, then I might take that call. But then I say, you don't have to go to cash, because I know people who told market is overheated when market was at 10,000 Nifty, 12,000 Nifty, 14,000 Nifty, and today even at 15,900 Nifty, they say market is overrated and they have missed a lot of opportunity in this up move. So I'm only trying to tell, rather than coming to cash, this is the time when you have to move from low quality to high quality, move from momentum to value, and move from small and mid cap to large cap. And if you want me to give some names, and especially I do a lot of bottom up investing and a lot of value investing. I do a lot of scuttlebutt research, meet management sometimes, go through all their see, today's stock price is not based on just the past data. Today's stock price is based on the future expectation. Many times people ask me this question. They say, sir, COVID cases were 4,15,000 per day, and at that time market was actually moving up. Now COVID cases have come down to 50,000, but then market does not follow fundamentals. Market is all wrong. Let me tell you, market is always a future looking animal. What do I mean by that? Today's market is based on the future expectation. If I expect in future things to be good, even a loss-making company today is trading at some price in stock market because people who are investing expect that in future that company will turn profitable. Or I can show you cases where a profit-making company is actually showing fall in its stock price because people might expect in future that company may not retain those EPS and the earnings, whatever it has. So what is important is understand market is always a future looking animal. It does not reflect just the today's economic data. It reflects the expectation of market participants in future. So I want you to follow these rules, 3 rules what I told. Move from low quality to high quality, move from momentum to value, and move from, I told, small and mid cap to large cap. This is based on current market environment I am suggesting. Now some of the stocks from large cap, I still see value in pharma. So for next 2, 3, 5 year kind of an investment, pharma can do very, very good. And work from home concept, whether there is corona or no corona, will find a lot of importance in future. So for that, IT will also do very good. So from pharma, stocks like Divi's Lab, stocks like Sun Pharma, Dr. Reddy. In fact, Sun Pharma has not performed for a long time. And when it starts performing, people can't even hold the returns. So few stocks, 2-3 stocks from pharma, I told you. From IT again, the legend and the two leaders always, TCS, Infosys, can continue performing better. You have a lot of good mid and small cap stocks, and I have a lot of positions there where I do deep research, because I have to find the next Infosys. You can't make money in Infosys today by buying Infosys at today's price. You have to buy the next Infosys. That is where mid and small cap value investing comes into picture, and IT will do very good. So from large cap, again, a lot of good IT stocks which I've mentioned can be considered. And I feel other than pharma and IT, even real estate as a sector will do very, very good. I know DLF has not performed for a long time, and in fact, people who bought it in IPO have lost all their money. I'm not recommending DLF at the IPO price, and at that price I was not comfortable. But today DLF at whatever is its price, 290 or whatever, it's a steal. And you have a lot of good stocks even in the same sector. So Bangalore based company only, if I have to talk, you have lot many, na? You have stocks like Shobha Developers, Kolte Patila, Pune based company. So there are a lot of good stocks even in real estate which can do good from now. So because I have to see the next 2 years, 3 years, 5 years when I invest, and these stocks can do good. And this is sector wise, stock wise I have given, but some of the companies where I see very good management, where I see good business, where I see adaptability in that management and business, they can also perform very, very well. I think I promised 1 or 2 stocks, but I've given too much. And this should have added value to people who wants current market view. And the 3 golden rules, what I told you in today's market, has to be adopted, and it is a must. Gone are those days where you buy any stock and you make return. That was only during COVID period, and that was no brainer. But these type of opportunities you get once in a decade and not every year. Today I don't see that kind of an opportunity by buying any stock where you can make money. But if you can buy good ones and some of the ideas whatever I have just shared and track them closely, I'm sure you can make tons of money. And I'll also tell you, if you don't know how to drive a Benz car, at least you should have a good driver, and you can sit back and sleep without worrying whether the driver is driving the Benz properly or not. I don't know so many things. Even in CA field, I don't know so many things being a chartered accountant. But I have a good chartered accountant who takes care of my file. I have a good person. I have my mother who takes care of my health and food. So like this, we have to have people who take care of you well, and you take care of them well. And this whole life is too short, and you have to remain happy by delegating a lot of your work to professionals. But picking up that good professional is the job what you have to do, and I do in my business. Thank you so much for this opportunity. Hope I've added value and you have progressed from where you started at 4 o'clock. But for sure, I'm so humbled, and it is one of the best sessions of my life I have felt because of this august audience what I have in front of me. Each one of you have attended this program from across the globe. Thanks to each one of you for being here and giving me this opportunity to share my small knowledge on capital market. Thanks especially to Anuj Goyal sir and the entire team. You have been so kind, and thanks for giving me this opportunity. And also thanks to Almighty for giving all of us this great opportunity to share our knowledge and perspectives, whatever we have. Thank you so much, kind of you.
Thank you, Rudra sir. We are really so grateful, so indebted for the value addition you have given. And in spite of the fact, since morning, you are continuously were there in one or more program, and even you have not find the time for lunch also, even for the natural car. So we are really, really grateful, and we can very well learn how one can be so humble after reaching to such a great height. So thank you very much. And I'm really grateful on behalf of the Institute of Chartered Accountants of India and Committee on Capital Markets and Investors Protection and Dehradun branch to all our viewers from each and every part of the world. And Rudra sir, I'm so happy that our chartered accountants, in normal course, one do understand that chartered accountants generally don't have any interest in the field of the capital market or the research. I'm the chairman of the research committee also. But let me tell you, in each and every program, I'm getting so good a response. Rudraji is exception. So if the program will be there when Rudraji is there, then of course each and everyone will certainly be there. But otherwise also the chartered accountants are having very, very keen interest in the capital market. And Dr. Amit Agarwalji is there, C. Amit Agarwalji is there from the capital market team of the Institute of Chartered Accountants of India. Kunal Sharma ji is there. They are the witness that we are getting extraordinary response continuously. Rudra sir, maximum number of programs, if any committee of the Institute of Chartered Accountants of India, quality programs is doing, is the Committee on Capital Markets and Investors Protection and the Research Committee. In Dubai on 25th of August, we are having the ICAI International Research Award program. I will request you to be the part of that. And in that ICAI International Research Award, we are having the nomination from each and every part of the world of the research papers of the chartered accountants. So chartered accountants are ready to go for any field which is challenging, in which their contribution can be there, and provided a platform is there, a proper opportunity is being given. And in the very first meeting of the Committee on Capital Market, we took a decision which was not there since last 70 years. I don't know what was the mindset, that the practicing chartered accountants who are in full-time practice have to play a very, very important role in the capital market. And in the times to come, I think we will be relaxing lot number of norms for the chartered accountants who are in full-time practice to be in a very, very active position in the capital market. But I will request, I will urge all our honorable members on behalf of the Rudra sir also, that don't put the COP up to your chest. Rakesh Jhunjhunwala is not having the certificate of practice. Kumar Mangalam Birla is not having the certificate of practice. And you see what is their status and how they have contributed, not only for the trade and industry, but also for the CA profession. Mohandas Pai is not having the certificate of practice. So I will request all of you to see that how we can really prove our worth. Chartered accountants are best suited, a professional. As far as the capital market is concerned, no professional can understand better than the nitty-gritties of the capital market, better than a member of the Institute of Chartered Accountants of India. So I'm quite confident when we are having the mentor and the resource person like Rudra sir, we should certainly will take motivation from Rudra sir, and will certainly try to see that how we can really contribute in a very, very active manner in this capital market. And this will not only be good for ourselves, but it will be good for the investors. It would be good for the trade and industry, and ultimately it is going to be good for the economy and the nation as a whole. So for the sake of the nation, for the sake of the economy, for the sake of the small investors, for the sake of the strong capital market, I think the very, very active role of the members of the Institute of the Chartered Accountants of India, who are the best accounting professionals across the globe, is the need of hour. And when we are having the mentors like Rudra sir, we will certainly go ahead in this direction. So thank you very much, Rudra sir, for your marathon inning, I will say. And since last 4 hours, we are listening to Rudra sir. That shows his commitment, dedication, devotion, love and affection for all of us. So thank you very much.
Just this last statement, nothing happens without the blessings of Almighty, is my strong belief. And he cannot come directly and help people. He only comes through other people and does his job. You just told about August 25th international conference, blah, blah, blah. And you are just making that statement now. And let me now tell you, this is what Almighty is just wishing there. And he is just giving all these dates or whatever through your mouth. He cannot come directly. He comes through people like you. August 25th is also my birthday. So I don't know if my birthday requires a celebration through a program there.
So we look forward to celebrate your birthday at Dubai, sir.
Surely I will do it by helping. I will do it only by helping people to share my small knowledge, what I have. And
yes, certainly.
I would love to celebrate my birthday that way. Not doing any party or enjoying. For me, every day is a birthday, and every day is a blessing of Krishna.
We are not having any party at Dubai. See, continuously for 3 days. Correct me, Dr. Amit Agrawal ji, if I'm wrong. On 23rd of August, 24th of August, 25th of August, we will be having 2 programs in every country in the Gulf countries. In the morning, in the evening, in the morning, in the evening, in the morning, in the evening. So 3 days, 6 programs, 6 different cities. That includes Muscat, that includes Abu Dhabi, that includes which cities? Amit ji, tell me.
Sir, we are deciding the modalities. Earlier, we were deciding in different countries, but some visa issues are there, and due to this COVID, we are now planning to UAE countries only, UAE cities only now, Sharjah, Dubai, and Ras Al Khaimah, and kind of thing. So we are trying to do that. And one coincidence, IFAC president Alan Johnson is having his marriage anniversary on the same day. He wrote me that he is a chief guest.
And sir, let me tell you, Rudraji. And Rudraji, let me tell you, the president of the International Federation of Accountants, IFAC. In IFAC, we are having more than 170 accounting body. Institute of Chartered Accountants of India is one of the accounting body. And the IFAC president is the chairman of our International Jury Award. Last year also, we initiated this international award for International Research Award last year only. And we are the only accounting body in the world who introduced this ICAI International Research Award. And this ICAI International Research Award is backed by all the 170 accounting bodies and the IFAC. And the last year also, the IFAC president was one of the member of the jury, and the immediate past president of IFAC was the chairman of the jury. And this time also, we are having the IFAC president as the chairman of the jury. And that IFAC president, the sitting IFAC president, will be celebrating the marriage anniversary on the same day on which you was born. So, and on the same day, we will be having that first ever International Research Award out of the country. Last year, we initiated it. Last year, due to Corona, we couldn't go outside, as we are having the presence of very strong presence of 25,000 chartered accountants in Gulf countries. So, we will be having this ICAI International Research Award program there in Dubai. And let me tell you, sir, 10 years back, we had one program in Dubai in which more than 8,000 chartered accountants were there, and they were there up to 1 in the morning physically. And your brother was the convener, and they were there from each and every part of the Gulf countries. So this is the dedication and devotion of the members of the Institute of Chartered Accountants of India, and we have learnt a lot from Rudra sir, how one can be so humble, how one can be so active, and how one can motivate others, how one can see to earn for himself or his family members is very easy, but to ensure that the members of the greater fraternity can also earn and can also be successful is something really great. It's the thing. देखो, विद्या का दान देना तो बहुत अलग बात है, विद्या का दान देना भी बड़ा मुश्किल होता है, पर ऐसी विद्या का दान देना जिससे आपको लक्ष्मी की भी कृपा हो, that is something great. And today I think we are really grateful, really indebted that we are getting not only the blessings in the form of vidya ka daan, but also we will be getting the blessings of the Lakshmi also. And thank you very much, Rudra sir. Thank you, team Dehradun. Rajat Sharma ji, past chairman of the branch, vice chairman Rajesh Gupta ji, Jasmeet Chaudhary ji, our honorable secretary of the branch, and all other honorable members. Rajni Sagwal ji was not well. He was suffering from the corona, the chairman of the branch. And now I think on the 5th of July, national conference, we will be having the presence of Rajneesh ji also, and past chairman Vimal Kishore ji, Himanshu Sharma ji, Harshit Gupta ji, and all the members present here, and our team of the Committee on Capital Markets and Investors Protection and the Research Committee, Dr. Amit Agrawal ji, CA Amit Agrawal ji, Kunal Sharma ji, and all our honorable viewers from each and every part of the world. Thank you very much. I will request all of you to please take very, very good care of yourself and your family members in this time of Corona pandemic. Of course, now the second wave is over, but we have to be very, very careful. Institute of Chartered Accountants of India, through its every branch is having the vaccination drive for all the chartered accountants and their family members. So I will request all of you to please get yourself and your nears and dears vaccinated at the earliest, so that we can fight from this corona disease in a very, very effective and strong manner. And if we will be healthy and wealthy, our economy will be healthy and wealthy, our trade and industry will be healthy and wealthy. So it is very, very important that the chartered accountants are supposed to be very, very healthy and wealthy. And the tip which we have taken from Rudra sir, if the chartered accountants will be wealthy, they are supposed to be healthy. So wealth is very, very important so that you can remain healthy. And I am quite confident that all of us will certainly concentrate to ethically earn the best of the money. Earning money is the best thing for a chartered accountant, for anybody. And of course, ethically, we have to earn it, so that if you will be having the blessings of the Lakshmi Ma, then you can disseminate not only the knowledge, but also the money for the cause of the society, for the cause of the nation. So thank you very much, Rudra sir. Thanks a lot. And I will be in touch with you. We will be in touch with you. We'll be sending the link also to you so that you can upload it on the YouTube also. And we'll share the details of the national conference to you so that we can make it very, very effective.
Sure.
Thank you very much, sir.
Thank you. Good
We
night.
are really grateful, really indebted from the core of our hearts. Thank you very much. I'm really sorry कि जो प्रोग्राम 6 बजे खत्म हो रहा था उसको 8 बजे के बाद हम खत्म कर रहे हैं. I'm really sorry. आपकी फैमिली का जो टाइम हमने लिया है, आपके बेटे का जो टाइम हमने लिया है, आपकी धर्मपत्नी का जो टाइम हमने लिया है, उसके लिए हाथ जोड़ के आपसे
Saturday, Sunday, compulsory. All these people have to take their family for a good vacation with safety, or enjoy the time tomorrow, day after, because today they have taken extra time. So let them give more time to the family back, not just to wife, son, daughter, also to father, mother, grandfather, grandmother, and everyone in the family. Thank you. Thank you.
And I think this is the last message, but the most important message which we have got of Rudraji. Thank you very much.
Thank you
and
so much.
I will also certainly try to follow it in letter and spirit. Thank you very much.
Jai Krishna.
Thank you. Jai Shri Krishna. Good night.
Recording stopped.